Here we go. Here we go, loop-de-loo. There we go. And there we go. And here we go. We're telling your followers you started your video. Yay! But why is it just paused? Okay, so let's go. Right there. There we go. Hang on, we're telling followers. Cool Bean, look who's here. Joseph, Jerry, Mars, Lion, Juan, Von Pham, Mike. All right, you guys, we're just getting started. We just got here, just getting the ball rolling. So let's keep on moving. Pete, Hippie Happy. That's an interesting name, Hippie Happy. Hermit, Winifred. Cool Beans, how you guys doing today? So, all that being said, let's get started. It is a little bit past 9 o'clock on a Sunday night. Officially, tomorrow starts the second week of the fourth quarter. So, that being said, let's jump on in, see where we're going, and let's get started. Give me 1 second, be right back. I've got my book. Whew. Can't do anything without my book. All right, Zach, Dreamer, Carlos, Pergy, DVN. Somebody wants to jump right in and take a look at Dividend Energy. Okay, well, Dividend Energy. Here we go. Uh-oh. Is that working right? Hello, hello. Yep, that's working, that's working, that's working, that's working. Uh-oh. And the video stopped. Well, that's not good. Let's try the video one more time. Video. There we go. Video capture. Okay. Okay, there we go. And right up there. There we go. That being said, let's get rolling. DVN is going to be the first one we're going to take a look at tonight. Dividend Energy. DVN. I like DVN. First thing we're going to take a look at, as always, first thing, hey, Doc's over here. First thing I always want to take a look at, the high, the low, where was it, where is it, what direction is it going? I got to move this over a little bit. Right there, that it? Nope, a little bit more. A little more, there we go. That it? That ain't it either, holy shit. That it. Okay, that's a little too far. All right, right there's going to have to do. All right. First thing we always want to see is the high, the low. Where was it? Where is it? What direction is it going? Down, up, down. Look at this. She just turns around last week and she's going to the upside. Video ended already. Holy cow. How could it end already? Just getting started. Let's try this one more time. And there we go. Checking connection. Well, let's see how it works. That being said, all right, currently the price is a $42.51. The $42.50 is 77 cents. Now, for those you don't understand, you don't know shit. Hey, reviews by Patrick. Be more than glad to talk to you, Mr. Patrick. Let's see. You actually want to come on and share your thoughts that I don't know shit? Okay. That being said, no, a little shy. Okay, Patrick's a little shy, everyone. So he don't want to come on. All right. All right, what is a dividend stock? Is that really that question you asked me? A dividend stock. Okay, so here's the thing. A dividend stock is any company that actually shares their profits with you with a dividend. Okay, so you have two different kinds of companies. There's 9,664 companies available any single day. Half of those companies are going to take all the profits, put it back into the company for escalated capital growth. If that's what you're looking for, you're in the wrong place. The other half of the 9,600 companies are going to take all the profits and they're going to share them with the investors. That's you and me. Once you buy a stock, you are an investor. We buy, we sell, we are investors. The company takes the profits and shares them with the investors. Those are the companies I'm looking for. I'm looking for a consistent, increase in their profits, and the consistent increase in the profits I'm looking for is 20 years. 20 years of increased profits. Well, the companies I look at are the Dividend Kings. 5 decades, 50 years of increased dividends. Dividend Aristocrats, 25 years of increased dividends. Dividend Champions, 25 years of increased dividend, but the rules are a little different between the champions and the aristocrats. But still, 25 years of increased dividends. And then you have the dividend contenders, 300 companies that have consistently increased their dividends for more than 10 to 24 years of increased dividends. Then I like to throw in Warren Buffett's list, another 100 stocks or so. But that being said, that's what I'm looking for. A safe, predictable, consistent income. 1% a week is what I'm looking for. 1% a week comes to, you still haven't painted that one. Yes, I did. I painted it yellow. Anyway, 20 years of increased dividends. That's what I'm looking for. Okay, what is dividend stock to answer that question? Good evening. Someone said good evening. Oh, thank you. Example. We're going to take a look at an example in a couple of seconds. Right now, if you have this list, how do you choose what to buy next? Sweetie Swag, what an awesome question. Okay, we are looking at Dividend Energy right now. I'm going to hold this right here. Now, Sweetie Swag, we're going to answer your question 1 second. Let me finish up with Dividend Energy, and we're actually going to use Dividend Energy as an example. So apparently, Instagram doesn't want to work tonight. So nobody on Instagram today. All right, let's go. Dividend Energy, we're currently at 42.51. Now, here's the way it works. I do what is called a covered call. That's where I buy the stock and I sell the option. So yes, I work with stock options. Most specifically, call options. A call option gives somebody the right to buy at a certain price by a certain date. I like only weekly options. October 11, 11 October, that's this Friday. 18 October, that's next Friday. 25 October, that's 3 Fridays away. 1 November, 4 Fridays away. 8 November, 5 Fridays away. Every single Friday they have options that expire. So I do this trade every single Monday and Tuesday. I buy a good quality stock if it fits, okay? And then I collect my 1% per week. That's over 50% per year. 50% per year. Who else gets 50% per year? Now, let me just show it to you. Dividend Energy, 42.51. That is the opening price for tomorrow morning, hypothetically speaking. Now, when I say hypothetically speaking, as soon as the market opens, it's going to open somewhere around 42.50. And every 2 or 3 seconds, these numbers are going to change. Okay? If you've ever seen anything on the stock market where the numbers keep flashing, they keep changing, that's exactly what it does. The numbers change constantly. But here's to give you an idea. If I buy it at 42.51, if I sell a call option at 42.50, well, I'm selling it for 1 penny less than what I'm buying it for. But here's the thing. I am collecting 77 cents a share for that privilege. So whoever buys it from me, they're buying it from me at 84 cents a share. I get 77. The market maker gets the rest. You got to get paid somehow. So let's take a look at the chart and see what it says to see if Dividend Energy is actually a good fit. So a year ago, all the way to the left-hand side, a year ago, why isn't that showing? Damn it. Damn Skippy. Okay. A year ago, we were at 43.58. The top of the year was 55.21, and that was back in April. I gotta go further. Okay, from April, she falls all the way from April all the way down to last week. Last week is the bottom of the year. Why do I like bottom of the year? Because you're going to make most of the money in the stock market buying low, selling high. So if the low is last week, sounds like a good time to jump in because you're not going to get any lower than the low of the year. Okay? Unless you're going to wait another year for it to get lower. I don't know. But here we go. Last 30 days. Now, I like looking at the last 30 days specifically okay, to see exactly what the stock has done. Say 30 days ago, we're at 42. She drops down to 39, shoots back up, drops all the way down to the bottom, 37.50, and now we're going to the upside. Right now, Friday was too high. It's the new 30-day high. And if you've been following me for a while, I don't like buying at a high. Because the old saying, buy low, sell high, not buy high and wait for it to go higher. Yeah, I don't do that. So Dividend Energy, as much as I like the company, it's not going to fit for this week, but I am going to write it down for 2 weeks from tomorrow. 2 weeks, DVN. All right, so DVN is on the list for 2 weeks from today, and we'll take a look at it in another 2 weeks, and hopefully within 2 weeks, she'll drop back down and give us a good opportunity to jump in. Okay, so there's not going to be any Instagram this week, today, because it's just not opening. All right, that being said, next one. DVN, we looked at that one. All right, so Sweetie Swag, you wanted to take a look at an example. Where did you go? I buy Dividend Energy, but only hold. Never figured out if I should sell. I need to learn weekly options. Now, Sweetie Swag, here's the thing. I like, don't get me wrong. I never tell people what to do with their money. I just show you what I do with mine. This here is not supposed to be advice. This is not any kind of tips or anything like that. I'm just showing you possibilities with what I do. If you decide to do the same thing I'm doing, hey, more power to you. Okay, I learned this strategy. Well, actually, I created the strategy when my 9-year-old daughter jumped on my lap and said, Daddy, 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 can you please teach me what you're doing? Okay, that was in 2008 when she was 9 years old. Okay, so 9 years old, she wants to learn how to trade. Great. So it has to be, for a 9-year-old, simple, safe, predictable, consistent, and no way that she could lose. That's the outcome that I had to figure out how to get. So I had to come up with some rules. Here you go, 5 rules. You're going to see 5 a lot. There's going to be a lot of 5s. 5 rules, 5 criteria, 5 rules. Rule number 1, never buy something you don't understand. Make sure if you buy it, you want to hold on to it for a long period of time, because you just might have to. Rule number 2, never sell at a loss. It defeats the purpose. Rule number 3, make sure the company is consistently profitable. It's actually simple if you think about it. Why would you put your money into a company that's not consistently profitable? What are you going to, you think that your money's going to automatically make them be profitable? It doesn't work that way. They're either profitable or a good run company, or they're not. So I only invest in good profitable companies. Rule number 4, make sure the company has weekly options. The title of the show is called Dividend Investing for Weekly Cash Flow. Dividend investing for weekly cash flow. So I need something to trade on a weekly basis. And I do not want to sit in front of my computer all day. So I'm on my computer 15, 20 minutes. That's it. Okay, within a week, it's only about an hour a week. So an hour a week gets me about 1% per week. I say average of 1% per week. A little bit later in the show, I'll actually show you some of the trades I made throughout the year, and you can actually see the numbers for yourself. All right, that being said, Dividend Energy is not really going to make it this year, so we're going to look at another one. So, Sweetie Swag, I am going to show you an example as soon as I find a good one. This one, don't get me wrong, I like Dividend Energy. But 30 days ago, she was at 42. Last week, she was at 37.50. Well, and Friday, she's at 42.42. Well, that's a profit right there. And here's the thing. If you do not take your profits, how do you know if you're going to be profitable? What the hell's going on here? There's just no Instagram tonight. It's not a profit until you take it. Also, nobody ever went broke taking profits. So, sweetie, James Day, how are you doing? So let's go back and take a look at this for a second. Okay, all right. All right, sweetie, you ready? Look, a year ago, she was at 42. Basically, the exact same place where we are right now. So what did you gain over the year? Absolutely nothing. But here's the thing, look, a year ago, she went up, you could have taken profits there. She came back down, you could have bought back in. She went up again, you could have sold and taken more profits. She dropped back down, you could have taken profit, and you could have bought again. She shoots up, you could have sold and taken profits. She comes back down, you could have bought it again. She went up, you could up, down. That's all they do. If they go up, you sell, you take your profits. When it comes down, you start buying again. Okay, whether you like to admit it or not, every day that goes by and you don't keep an eye on your money, well, someone else is going to do it for you. And they probably don't have your best interest in mind. Okay? So, if you want to buy and hold, hey, great, more power to you. But take a look. Last year was at 42. It's at 42 now. So whatever you think you made last year when you bought it at 42, she shot up to 56. Now she came back down to 42 again. Well, if you've taken your profit and then she comes back to 42, well, you could have bought it back at 42 and you would have had all that profit to, I don't know, buy yourself a new pair of shoes or whatever. Okay, add to your portfolio, increase your standard of living. It ain't a profit until you take it. Okay, so if you buy and hold, that's like you're marrying your stock. Okay, great. You now have a dust collector. It's collecting dust until you turn around and sell it. It's a commodity to be bought and sold, to be traded. All right, you need 100 shares. You need 100 of the stock to do this, right? Yes, you do. But there are other trading strategies. You can still take advantage of it. Okay, so every single company that pays a dividend has an EX dividend date when they pay their dividend. Now, stocks have a tendency to go up in value just before the dividend date. So if I buy the stock 2 weeks before the dividend date on a Monday, I like Mondays because that allows me more time to sell the options to collect more cash flow. So if I buy it 2 weeks before the dividend, I can collect the run-up because stocks have a tendency to go up. Hey, Christopher, thanks for that. Stocks have a tendency to go up in value before the dividend date. Okay? You buy it, collect a profit, sell it, move on to another one. Okay, this is going to be no Instagram tonight. Ain't no way of looking at it. Okay, so no Instagram. What else do we go over here? I don't want to do another YouTube channel, another Facebook channel. No. Berkshire Hathaway. Berkshire Hathaway doesn't have any dividends. Sorry, dude. They don't share their profits. Why would you invest in a company that doesn't share the profits? If you're buying companies that don't share profits, well, you're not looking for cash flow. You're looking for capital appreciation. And if you're looking for capital appreciation, you're definitely in the wrong place. That is not what I'm doing here. Okay, there are lots and lots and lots of trading strategies that you can do. Some of them are specifically for speculation. Some of them are specifically for safety and value. And some of them are for cash flow. Well, the strategy here is cash flow and cash flow only. I'm not looking for capital appreciation. And I'm not quite sure how to explain that to people to get them to understand. It's cash flow. 1% a week, that's over 50% per year. So let's keep on going. Wildcat Sam, how you doing? Mahesh, does option sellers are categorized as day traders by the IRS and brokers? No. A day trader is someone who trades during the day. Not mean daylight hours. I mean, Simone is here. Woohoo! Day traders are people that buy and sell multiple times on the same day. Okay, so if we buy on a Monday and sell on a Friday, we're considered as swing traders. All right, so to be a professional trader, you got to do at least 4 trades a day, every day. Miguel, ¿qué pasa, amigo? ¿Cómo está? What do I think of SAVE? Well, let's take a look at SAVE. I don't think I've ever traded it before, so let's take a look. SAVE. $1.69. That's Spirit Airlines. Dude, that thing is going down real fast. Look at this. It was up to 17. Now it's down to $1.50, $1.69. Can you see this information using Fidelity? Sweetie Swag, this here, okay, this here is free to download. It is called Think or Swim. You can go to thinkorswim.com. You can download this trading platform. Everything on there you could possibly need. It has a whole bunch of charts. It has a seasonality chart, which I don't think Fidelity has. I don't know. Somebody correct me if I'm wrong. Also, it is the only one that has the trigger trade that I know of. Okay, it also has a dividend calendar that I can import my own stocks. Yeah, I don't know about Fidelity. Honestly, I don't. Okay, let me think. About 15 years ago, I've looked into about 100 different trading platforms. I mean, really looked into them, and I wrote a book about it. Okay, and that was like 15 years ago. I found this one 20 years ago, and this is the one I've been trading with ever since. And I have looked at other ones. They don't have all the same perks as Thinkorswim has. Okay, so save. Yeah, I don't think they have any dividends, do they? For that, we're going to go, get out of that, right here, Micron, here we go. Okay, so we're going to put it into Yahoo Finance. Now, Yahoo Finance is going to tell me what kind of dividend increases they've had. None. And they've only been paying a year. A little over a year. You see that? 2023, January 2023, 10 cents, 10 cents, 10 cents, 10 cents, 10 cents, 10 cents, 10 cents. And February 22nd, 2024 is the last dividend they paid. So Miguel, as much as you may like Save, Spirit Airlines, I'm saying it doesn't fit in for me. But if you like it, hey, more power to you. It doesn't work for me. All right, so let's keep on going. Bead, Turbo. What the heck is Turbo? T-R-R-B-O. Turbo Energy. T-U-R-B. Okay. It has no options, dude, so that's going to be a no. Sweetie Swag, why 2 weeks? Why 2 weeks? Where was I? Where was I? All right, Sweetie Swag, why 2 weeks? Okay, let's get out of here. October, let's go back 1 month. Here we go, September. All right, now, just for the fun of it, okay? Just for the fun of it, sweetie, you ready? Here's a dividend calendar right here. Month of September. I'm going to pick any random stock. I'm going to pick American Express. Okay? American Express has its dividend on the 4th. And it is 70 cents. Okay? 70 cents on the 4th. So, 2 weeks before the 4th would be the 20th. On a Monday, it would be the 16th. So let's go take a look at the chart for American Express, the opening price on the 16th. AXP, the 16th, right there, right, 16th. Okay, so here's Monday, the 16th, and the 4th, right there, the 4th. Okay? Or is that the 5th? I don't know. That's the 3rd, that's the 4th. Okay, so Monday the 16th, look at it go up. Now, when I say stocks have a tendency to go up before, 2 weeks before the EX date. Now remember, the dividend's only 70 cents. So the opening price on the 16th was $261. $261.31. So if the dividend is 70 cents, hey, Bama Redneck, thanks for that. That was cool. If the dividend is 70 cents, well, if I buy it at $261.31, My exit target is going to be 262.01. What's the 70 cents that I'm collecting? Because the dividend's 70 cents. If you want to collect the 70 cents, there it is. You're in and out on one day. Okay? 261.31. But look, 261.31, it goes up to 272. It even goes all the way up to 275 or 276. So yeah, 2 weeks before the dividend date. Verizon, please. Ivan, how are you today? Visa. VZ, Verizon. Okay, so here's Verizon. High, a low, where was it, where is it, what direction is it going? All easy to see. Where's the high? Right there. Where's the low? Right there. What direction is going? Right up there. Okay, Redneck. Bama Redneck, another one. Woohoo! Thank you. All right, so currently 44.18. That's the current price. So at 44.18, what is the closest strike price? Well, the closest strike price to 44.18 is going to be to 44, but it's only going for 34 cents. Once you subtract the 18 cents that you lose, it doesn't work. The next one is going to be to 44.50. 15 cents doesn't work. Sorry, Ivan. The number, don't get me wrong, I love Verizon, I really do. But the numbers just don't work for Verizon this week. Naughty Woodcraft, good evening to you. Woodleg, that's an interesting name. Eric McFeathers, how do you think of McDonald's? Mickey D's, MCD. Well, we're going to have the same issue, aren't we? High, low, where was it, where is it, what direction? Look at that, up, down, up. Well, I don't like buying at the high of the year, and that's basically where McDonald's is at the moment. It's at 303.81. The 302.50's there, 305. You're not quite making your 1%. Because if you buy it at 302.81 and you sell the 302.50s, well, you're losing 81, 51, you're losing $1.30. You take $1.30 off of that, you're walking away with 220. Yeah, no. Sorry, Mickey D. The numbers just don't work. Now, if you like McDonald's and you want to collect, what is that? That's almost 0.7 or 0.8. Okay, 0.7 or 0.8 is not that bad. It's like 30% per year, somewhere that 30 or 40% per year, if that's okay with you. Me personally, I like 50% per year, and I like 1% per week. And I don't like to buy at the high. Well, that's where McDonald's is right now. Okay, the last 30 days, there you go. Okay, it's like 37, she drops down, she shoots back up. Yeah, that's too close to the high for me. All right, Simone Jamie, okay. How does Kohl's look this week? All right, Slick Rick, how are you? Kohl's, huh? KSS, here we go. Interesting, look at that. See how it's bouncing off there? I like that. Okay, so high, low, where was it, where is it, what direction, up, down. Now she's bouncing off of this. We want to zoom in, take a good look at it. That being said, the current price, $19.74. The 20s are going for $31. Here's our first contender of the day. So, sweetie, we're going to give you an example right here, right now. Who sings that song? Right here, right now. All right, anyway. A year ago, we're at $18.33. The high of the year, $29.65. That was the beginning of April. The last 30 days, here we go, check it out. 30 days ago, we're at 20, drop all the way down to 18, shoots up to 21.25, drops back down. We have 1 day of the upside. I like 2 days of the upside, but I already own Kohl's. Okay? But let's take a look at what it looks like if we were going to buy it. Now, the 1950 was probably going to be the best one. Oh, no, the 20s. Let's do the 20s. Okay, so let's get out of here. First thing I want to do is I want to change it from single to covered stock, and that's right over here. Okay, click on that, and that brings you down to covered stock and actually shows you exactly what it looks like. So we're going to do the 20s right here. Okay, now I'm only going to do 100 shares because I do understand 10,000 shares is intimidating to some people. Market order. Now I'm going to read you the order. Buy one covered call of Kohl's 11 October 24. That means I'm buying the stock first thing in the morning when the market opens. And then I'm selling the option that expires on Friday, the 11th, at $20, okay? And I'm going to buy the stock at the market price. Now, the next line, the break-even point, is 1930. Well, the stock right now is at 1975. So anything over 1930 is going to be a profit. Okay, so if I'm buying it at 1975, selling it at 20, collecting $70 profit. Okay, we're going to do the math in a second. How about GM for this week? Antonio, we'll take a look at GM. Hold on. GM. We're going to take a look at that in a bit. Okay, so this is my break even. So anything over $19.30 on by the close of business on next Friday, the 11th. Anything over $19.30 is going to be a profit. All right, so if I do this trade, it's going to give me $70 per contract. Okay, so remember when I said I want simple, safe, predictable. Well, predictable is right there. It's already telling me what I'm going to do even before I do it. So that's predictable. Simple, yeah, buying the stock, selling the option. Now, to find out what rate of return I'm getting, well, that's a mathematical problem, and it's always the same. What's my profit? Well, the profit on this trade is $70. So $70. And how much is the trade costing me? Well, it's costing me $1,930. So I divide it by 1,930, and my rate of return, did you see that? 3.6%. I like 3.6% for the week. Now, I already own Kohl's, so I can't get that, but I can get a premium on what I already own. So, if that makes sense, great. So here's the good, bad, and the ugly. Okay, get rid of that. Get rid of that. And let's go back to here. All right, so Kohl's. Now, all right, so if we buy it on Monday, let's get out of here. Get out of there. So we're back to where we started. All right, so if I buy it first thing on Monday, regardless of what happens throughout the week, if she is above $20 come Friday, I collect the 3.5%. All right, that's great. What else do I collect? Well, considering I'm buying it at 1974 and I'm selling it at 20, well, I collect another 26 cents. So 26 cents on top of the 31, well, that's over 57 cents per share. And 57 cents per share on a $20 stock. Clear that. 57 cents per share on a $20 stock. That's 2.8%. Okay. Dismiss. We're just not doing Instagram today. Terribly sorry. All right. Hopefully that makes sense. What's your average return on a single trade? Amada Capital, how are you today? Well, Amada Capital, you're new here. I would remember that name. Now, I've been doing this since the beginning of January. You know, the live shows, okay? Now, I have been trading for over 20 years, and I just so happen for this year to have all my trades since the beginning of the year posted online for all to see. Okay, now the reason why I do that is to show you that it actually does work. Okay, so here's week number 1, January. You click on that and it gives you the trades. Okay, January 2, 2024. Okay, did 4 trades. Macy's, General Motors, Ford, CVS. Okay, so what did I make the very first week of the year? I made 2.12, okay, in that account. Well, look at this account over here. Now, I have 6 different accounts. I share 3 of them with you guys, okay? This account here, CVS, General Motors, Southwest Airlines, Comcast, and Ford. Well, very first week this year, 2.99. Week 2, 2.43, 1.3. Week 3, 0.85. See, I don't make 1% every single week, but it does average over 1%. So week 3 here, 0.85. Okay, 1.35. Week 4, 2.78, 0.9. 1.03, 1.62. 3.68, 1.06. You can go through the whole thing. Every single trade is posted every week to show you that, yeah, it does work. It is simple. Now, I do have a morning trading group for those of you who want to actually trade along with me. Okay, a Zoom link first thing in the morning gets sent out, and we actually trade. So I do all my trades first thing at 9 a.m. Then at 9:30, we open up the floor for questions, and you can ask any question that you want. That being said, let's kill some more of these questions. Holy God, I get 69 questions. So yeah, Ameda, my average is 1% per trade per week. Average. Michael D. Robinson, for me, I have DVN. I'm a short 4350s in cost basis. Cool beans. I see the profit takes, so we'll keep shares. Cool beans. Nice going. Uh-oh. What did I do? Let's go back over. Uh-oh, I missed some questions. Damn it. Sorry, guys. I got a lot of questions coming in from different websites. Oh, wow. I missed quite a bit, didn't I? All right, there we go. Here, I'm caught up now. Instagram is working for me on the phone. Close it and open it again. Okay. Well, I mean, I have to close up my whole phone. Come on. All right, phone is closed. We'll give it a little bit of time. We'll reopen it up. Austin, something didn't make sense. You're giving me that confused look. What are you thinking about Pepsi earnings? Okay, Pepsi, to be totally honest with you, I think I bought Pepsi once in 20 years. Reason being, take a look at the premiums that Pepsi is offering. Right now, the current price is $168. The closest one is $167.50, and it's going for $2.92. So I'm losing 50 cents off of that at 2 something. So that's 1%. But look, she's dropping. So it's actually giving, okay, well, cool. It actually has 1%. So let's take a look at those numbers again for Pepsi, because they usually don't give 1%. All right, here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look, nice uptrend to the high, pulls back up again, pulls back again. We're at 167.97. All right, the last 30 days. Here we go. Here's the last 30 days. 30 days ago, we're at 177. We jumped up to 178, fall down to the bottom on Friday. So Friday's the bottom. So I'm going to put Pepsi down for next week, because as soon as it finds its bottom and goes back up, I want to see what the numbers look like. Other than that, it's not really worth taking a look at, because it's in a downtrend. So as soon as it finds the bottom, okay, it could be Monday, could be Tuesday, we don't know. As soon as it finds the bottom, it goes back up, and great. Shackley, you asked me about SCH the other day and VOO the other day, and both of them were no. But we'll take a look at it again and tell you again why it's a no. Okay, Reggie Bo Jackson, can you look at Occidental Petroleum, OXY? Of course. Okay, so we're going to look at Pepsi next week, but Reggie wants to take a look at Occidental Petroleum, OXY. OXY. Here we go. Interesting. Okay, OXY, here we go. The high, the low, where was it, where is it? What's the direction? Down, up, down. She's bouncing right here, going to the upside. 55.82. The 56s are going for 84. Everything looks great on the numbers. Well, what is the chart going to tell us? Well, let's take a close look at the chart. A year ago, we're at 60.69. Top of the year was in the middle of April. The middle of April, right there, the top of the year. The bottom of the year Okay, 30 days ago, we're around 53. We dropped down to the bottom of 49.50. And now look at the run up. 1, 2, 3, 4, 5, 6 days. 6 days going to the top side. Terribly sorry, dude. It looks like she's coming down. Okay, it may not be tomorrow or the next day, but she's definitely going to come down from that 30-day high. But we're going to write Occidental Petroleum down for 2 weeks. OXY. Because I like Occidental Petroleum. But look, 1, 2, 3, 4, 5, 6. 6 days to the upside. So if I jump in on Monday, then I'm going to sell it on by Friday. Well, is it really going to go up another 5 days? It's already gone up 6. 6 and 5 is 11. When's the last time you've seen a stock go up 11 days straight in a row? I don't see it. So what would be the purpose of me buying it on Monday at the high? I don't buy at the high because it doesn't make sense. Okay, so Shackley, VOO and SCHD are both going to be a no. And here's the reason why. Okay. First thing we want to do, SCHD. Now, I'm going to show you SCHD and VOO dividends. How good are they at paying dividends? Well, SCHD, number one, it's only paid 13 years of dividends. I like 20. But here's what I don't like about SCHD. I'm going to read you the numbers, and you let me know if they continuously go up or if they don't. 12, 14, 21, 26. Well, that's consistently going up. 20, wait a second, that's going backwards. That's a 30% drop. Did you hear that? A 30% drop. 23, 25, 27, 25. Well, that's a 15% drop. 28, 27, 31, 30, 27, another drop. 30, 32, 24. That's a 20% drop. 40, 33, that's 15% drop. It goes up, it goes, you can look through the whole year. Up, down, up, down, up, down. That's all it does. Okay? That's all it does. Up, down, up, down. No consistency with their profits whatsoever. So you're going to put your, imagine this if you will. You put your money into a company, 1 week they give you $100. Great. Okay. Next week they give you 70. What's so good about that? Next week they give you 105. Well, okay. Next week they give you 83. Up, down, up, down. There's no consistency whatsoever. How can you run a household or a home or even a business if the profits are keep going up and down, up and down? No, I don't like it. Okay, VOO. VOO. Okay, VOO has actually paid 14 years of dividends. 56, 53, backwards. 54, 57, 58, 69, 57, backwards. 64, 69, 94, that's nice. 67, backwards. 74, 79, 91, 78, backwards. 81, 88, 98, 90, backwards. 95, 109, 101, backwards. 95, backwards. 88, backwards. 130, 1, backwards. 101, 118, 108, backwards. 116, 120, same thing, up, down, up, down. But wait, this is my favorite part. But wait, it gets worse. It really does. Shackley, hold on a second. Hey, go with it. How are you doing? Okay, so you ready? It gets worse. It really does. You want to put your money in SCHD and VOO? Well, let's take a look at the summary. What is the summary? Well, the summary gives you the actual numbers. Okay, here they are. The previous close, the open, the high, the low, the bid, the ask, the range, the 52-week range, 375 to 529, great. PE ratio, 2869. Yield. Do you know what the yield is? The yield is how much you make on your money. If I put in $100 and I get a 1% yield, well, I get $1. If I get a 5% yield, I get $5. If I put in $100 and get a 50% yield, I get $50. You're putting your money into VOO and you're getting 1.28 for the year, not the week, not the month, not the quarter, the year. You're putting 12 months and you're getting 1.28. And you think that's good? That's VOO. SCHD, well, that's a little bit better. SCHD. Okay, here's the details for SCHD. The price, 84. The week range, 66 to 85. PE ratio, 16. The yield, 3.47. Explain to me how you think 3.47 or 1.3 is better than 50%. Don't get me wrong, it's okay for people who say, you know what, I don't care about my money, let me give it to a computer, because that's what you're doing. It is an ETF, electronically traded fund. And don't give me the bullshit about exchange traded funds, because all exchanges are electronic. Same damn freaking thing, controlled by a computer. You're giving your money to a computer, and the computer's giving you 3.47. All right, let's go back. I don't like either one of those. There's always someone, at least twice a week, says, oh, SCHD, VOO. You did. See, I feel bad for people like you. I really, really do. Because you're not doing your own due diligence and doing your research. If I take my money and I put it here, I'm getting 1.37%. Well, that freaking sucks. You can give it to the federal government, and the federal government will give you 5%. Okay, don't listen to a damn word I say. Go to the bank and say, hey, can I put it into U.S. Treasuries? Well, U.S. Treasuries are paying 5%. Why the hell would you put in SCHD if SCHD is giving you 1.3? Okay, APA, Larissa, that's Apache. APA, Apache, yay! Okay, so anyway, Hammer Sophia, if you reinvest your 1% per week, that's a massive capital growth. Depends on how you look at it. Okay, now, you're talking about consistently increasing your what do you call it? DRIP, dividend reinvestment plan. That's what you're talking about, taking that 1% every week and putting it back in and have it grow, grow, grow. Yeah, that's about 62% per year. You can actually double your money every 14 to 16 months. Great. Yeah, that's not what I do. And that's what I already told you. I take my money, I put it aside, and that 1% per week, I live off of that money. Okay, that's what I pay my bills with. Okay, so I'm assuming, if this is the way you're talking, this is what I'm reading, that you're looking for capital growth. You're in the wrong place. I'm looking for cash flow. Huge difference. Cash flow, capital growth. What do you trade yourself? Yo, it's me. What do I trade myself? Well, I thought I was pretty clear what I traded myself. Okay. Lowe's, AEO, BITO, Win, Marathon, MPW, Macy's, Win, Intel, Lowe's, Paramount, Gap, Kohl's. I already did those. Intel, Marathon, Win, Kohl's, MPW. You want to see what I trade? They're right here. Okay, Macy's, BITO, Kohl's, Lowe's, AEO, Win, Kohl's. All my trades are posted right here on my website. MPW, not alone. Yes, I've been trading MPW for a while, and the numbers are just great. They are. Let's go back to where we were. So we're looking at Apache. Okay, here's Apache. High, low, where was it? Where is it? What direction is it going? Same thing, look. The bottom was right here a couple of weeks ago. I love it when a stock falls, hits the bottom, turns around, goes back up, because you're not going to get any lower than the low of the year. And if that was like a week ago, well, look, here's your high up here at 42. The low's down here. We're still in the $26 area. Okay, well, from 26 to 40 to the high of the year, that's a lot of space. Okay, so let's take a look. A year ago, 37.67. We topped out the middle of October of last year, 43.58. Here's your last 30 days right there. Last 30 days. 30 days ago, we're at 25.50. Okay, bottom was 22.60, somewhere in that area. She went up, pulled back, now she's up. Now she's at 26.89. Well, that's a 30-day high. I don't like buying at a 30-day high. Larissa, terribly sorry. That was a good trade at the beginning of the week. Well, now you're done. Okay, you jump in on Monday, well, you're out on Friday. Okay, so if I jumped in on Monday, and we did look at it on Monday, okay, so last Friday it was here. Monday it wasn't. See, I didn't do this trade this week, and here's the reason why. Okay, let's go back a couple of days. Okay, this is what we saw on Monday. Okay, here's Thursday, the bottom. Friday was an up day. Monday was not an up day. Okay, so I invested all my money on Monday. So when Tuesday came around, Tuesday would have been a good day to jump in, but no, we didn't because I already had all my money invested. You're going to find it a lot. If you trade on a consistent basis or you invest your money, you're going to see it a lot. You're going to miss opportunities. You have to keep your head. Don't be greedy. Look for a safe, predictable, consistent rate return. I look for 1% a week. Okay? I witnessed a brawl in Arby's today. Cool beans. What are they fighting over? The price of chicken nuggets or something? I don't know. All right, so that's a patchy. It doesn't look good this week only because it's going to have some profit taking. Because when you go from 23 to 27, it's a $4 move. Not a lot. But a $23 stock, well, that's over 20%, or close to 20%. And people like me would take a 20%. That graph is zesty. All right, thanks, I guess. I'm writing it APA down for 2 weeks. So we're going to take a look at it. In 2 weeks, APA. All right, so that's APA. We'll look at it again in 2 weeks. VST, Norbert. What the heck is VST? Now, if I have to say what the heck is something, it's usually going to be a no. And this one's a big fat no. Look at that. Look at that run. Why would I possibly want to buy it now? I would have wanted to buy it a month ago. See? 30-day high here, 30-day bottom there. Look at that run. Okay, I like a 30-day high to a 30-day low and then jump in after 2 days to the upside. It's really not that difficult. Sorry, Norbert, VST, I'll write it down for 2 weeks. We'll take a look at it again in 2 weeks, maybe even 3 weeks. Yeah, VST looks like we'll do 2 weeks. VST. Okay. All right, Johnny Ringo's a swing trader. Way to go. VST I got in 40,000 shares. 500 price is up next. I don't think so, brother. Think about it, Norbert. Seriously. Okay? You got in at 40, way down here. Okay? And you think it's going to go to 500. Yeah, more power to you, brother. Seriously. Okay, you got people like me. You buy here, and it goes up to here. Yeah, I'm taking my profits. I really honestly don't care. It ain't a profit until you take it. You're going to get to a certain point, and that thing's going to drop really bad. You're going to say, wish I sold. Because that's all they do. They go up and they go down. That is it. I can't see 500. Not when it's currently at 138. Has it ever been to 500? Probably not. Thoughts on CAPL? Never heard of it, Adam. CAPL. Now, I've been trading for 20 years. Okay, this is a monthly. Okay? What is the difference between a weekly and a monthly? Well, we can go all the way back to 3rd grade or 4th grade. Okay? We learned that there's 5 weekdays, 2 days on the weekend. We also learned there's 7 days in a week, 12 months in a year, 52 weeks in a year. So here's the difference. Monthly options, 12 times a year. 12. Okay, weekly options, 52 times a year. So ask yourself a question. Which would you prefer? 12 checks or 52 checks? It's probably not the question you should be asking. It's like, where is the better rate of return? Well, the rate of return on the monthly is actually horrible. See, right now it's at 21.18. See, the 20s are going for $1. Ooh, that's a nice one. But I'm losing $1. Wait a minute, I'm losing 73 right off the top. So you take that off of there. So I'm walking away with 7 and 5, 13. I'm walking away with 13 cents. 13 cents is not 1% of 20. And then I got to hold it for 2 weeks, because for 12 days. Well, it's 5 days until Friday, so I got to hold it to the next Friday. So I got to hold it for 2 Fridays, the 18th of October. Well, that's 2 weeks. So I'm making less than 1% and holding it for 2 weeks. And if I'm wrong, well, now I got to hold it for 4 more weeks. Yeah, I don't do monthlies. The numbers never, ever, 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 ever work out. Weeklies, I look for 1% a week. That's over 50% a year. Here, this month right here is only 1% or 2%, if I'm lucky. That's 24% a year. Don't get me wrong, 24% a year is not bad, but here's another problem with monthlies. See, here's 30 days. Where's 30 days? Hold on. 30 days is right here. Here's 30 days. If I am wrong, okay, 1, 2, 3, 4. Look, went from 19 to 21 to 20 to 22. All right, what is that? 20, 21, 50, whatever the hell that is. Goes up, down, up. So where is it going to go in another 4 weeks? And how am I supposed to guess that? Boeing, long till 150 breaks. Seriously, Boeing? BA. We'll take a look at Boeing. One thing nice about Boeing is they do get government contracts. That's nice, because we all know how much the government loves to spend on their defense. All right, that being said, next on the list, so CPL is a no. GEV, Norbert, really? I've never heard of GEV either. GEV. That's going to be a no. Look where it is. Okay, I don't buy at the high of the year. This is Schwab, right? Don't you need to set up an account to use this? Sweetie Swag, this right here is Think or Swim. Okay, separate entity. Thinkorswim.com. You can download it for free. And you're right, it is owned by Schwab. Now, Schwab will let you use it for a month or two for free. But then they want you to open up an account there. I don't know how you feel about that. It's not my business, but I haven't found a trading platform that even comes close to equaling this one. And I've been trading for about 20 years. All right. What do you do with stocks if option is not exercised on Friday? Slick Rick, come on, dude. You've been here long enough. Let's go back to here. Let's get rid of this. Let's take a look at General Electric. General Electric. Okay, well, we can do that one. But General Electric, here we go. Okay, here's General Electric right here. Okay, Slick Rick, are you ready? General Electric is right here on the 26th. The dividend is 28 cents. Big whoop. If I'm going to buy it 2 weeks before on a Monday, well, that's tomorrow. No, it ain't. That was last month. But anyway, besides the point. If I'm going to buy it here on a Monday, 2 weeks before the dividend on a Monday, if I buy it here and I sell the strike price, don't break your monitor. Gary, look at this, see? I think that's funny as hell. So anyway, if I buy it here, and what is the current price for General Electric? 186. Okay, so 186 to 187 is going for 230. Nice. All right, so here's the thing. You ready? If I buy it here, 186, okay, 'cause that's the current price. If I buy it at 186, I sell somebody the right, not the obligation. There's a big difference between calls and puts. The right to buy it, but they're not obligated at 186. If I buy it at 186, I sell somebody the rights to buy it from me at 186. And what am I collecting? I'm collecting the premium. The premium, let's say it's $2.30 a share. Okay? I collect at $2.30 a share the instant I sell it. That goes directly into my account. Now, come Friday, if it's above the strike price I sold, well, someone's going to buy it. And I'll be back into cash on Monday. Now, if the stock price drops and it doesn't get called away, I still keep that 1% or that $2.30 per share. It's always per share, okay? If it doesn't get called away, well, I take the stocks and I sell an option, a covered call, again on the 16th. and I collect another 1 or 2%, whatever it is. Okay, and on Friday, it's either going to be bought or it's not, and then I'll do it again. Okay, and I'll do it again, and I'll do it again until it hits my target price. Remember rule number 2, never sell at a loss. So if I buy it Monday, tomorrow morning at 276, I sell somebody the rights to buy it from me at 276. Okay, if it goes to 274, well, I keep the money and I do it again. 276, I keep money and I do it again. And then I collect the dividend and I get the premium. So premium, 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 dividend, and I can keep selling a premium every single week. So here's a question for you. Okay, if I am collecting at the money $2.30 per share it's not every single week because these numbers change constantly. At this moment in time, this is what the numbers is. Monday morning, the numbers are going to change. But I'm just giving you an example. Okay, this is not advice. This is not a tip. This is not a recommendation. This is an example for educational purposes. If I buy it first thing Monday morning, that's the price. I want to sell the closest strike price, which is right here, $2.30 a share. The dividend itself is only 28 cents a share. Why the hell would I want the dividend? I don't. But if I don't sell the stock, well, I get $2.30 per share. I get another $2 per share. I get a new $2 per share, and I get the dividend. Antonio, I wrote down General Motors. We're going to take a look at it. Okay, so I will not sell the stock for less than what I paid for it. I will continue to write covered calls every single week, week after week after week, until it hits my target. That's the focus. Never buy something you don't understand. Well, I know who the hell General Electric is. I know what they do. It's not like I'm buying something I have no clue of. Now, some of you guys give me some stocks to take a look at, and I say, what the hell is that? If I say, what the hell is that, that means it's something I've never heard of. Now, I grew up in the 60s, 70s, and 80s. I know who General Electric is. I know who General Motors is. I know who Ford. I know AT&T, IBM, American Express, Visa, MasterCard, Discover, Wells Fargo, Bank of America. I know lots of companies that I see every single day. Why would I invest in something I don't know? Swag, same thing. Okay, I like the user experience. It is easier for my reporting. All right, Mahesh, I have no idea what that means, but okay. Uh-oh, I missed some questions. Uh-oh, yes, I did miss some questions. BSTPAL. Why Sink or Swim have 2.4 rating on app? Yeah, I hate the app. I didn't say anything about downloading the app. I said on your computer. I do not like the Think or Swim app. It is horrible. It's too congested, too much information. But I do like the platform on the computer. Why do I wait 2 weeks before looking at the stock again? No, that's not what I said. Okay, when I take a look at a stock, okay? Okay, so here's General Electric. Here's the high, here's the low. That's where it was, this is where it is. Now, when I say I will look at it again in 2 weeks, well, here's where we are now. It doesn't make sense for me to buy when it's this close to the high. So I will wait 2 weeks for it to come back down, because as profit taking. Now remember, people buy stocks to get a profit. When it's at a high, no, not everybody thinks the same. Okay, I've had the fortunate situation. I've been fortunate enough in my life to be on all 3 or 4 different areas. Let me explain them to you. One is a stock buyer, just a person who likes to buy the stock, hold on to it, and collect dividends. Great, there's nothing wrong with that. Then you have the option buyers who like to buy options and trade those and make money off of that. And then you have the option sellers. That's where I'm at now. It's a safer place to be. And I also have the pleasure of being in the speculation department and day trading and swing trading, where I actually sat in front of my computer for hours upon hours, making a penny here, a penny there, a penny here, a penny there, and making a lot of money that way. Yeah, it works great, but you're trading your time for money. This trading strategy right here is 10 to 15 minutes a day. It's less than an hour a week. An hour a week to get 1% on my portfolio. That works for me. I grew up in the 60s, 70s, and 80s. I went to work at 8 o'clock in the morning. I checked out at 4:30, 5 o'clock on a Friday afternoon. The stock market does the exact same thing. I jump on at 9 a.m. I do my trades first 10 to 15 minutes of the day. I'm out. And then on Friday, I jump in at 3 to make sure I am correct. And I make sure all my positions on Friday afternoon before the market closes, before the options expire worthless. And then I see what's the best situation for the next week coming up. Because you may deny it all you want, but you ain't going to stop Monday from coming. You ain't going to stop Friday from coming. The clock is going to keep on ticking. Tick tock, tick tock. It never stops. So I want everything in my favor. Odds and probabilities, I want them in my favor. Why am I an option seller nowadays rather than a buyer and a stock buyer? Because 80% of all options expire worthless. So if I am selling options, okay, I am 80% more opportunity of winning and being right. I don't buy options because it's only 20% chance you're going to be right. No, thank you. Okay, so when I say 2 weeks, okay, here's the high. That's too close to the high for me. I want to wait for it to come down and then finish coming down. Then once she's finished coming down, she will turn around, go back up again. Now, the way I look at the chart, well, it looks like 2 weeks. Look, it goes up, down, 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 up, down. That's all it does. Because right now, it's at the high. I do not want to buy it at a high. I will wait 2 weeks. I will look at it next week and see what it's doing and see how close it is to the turning around. Because if you look, this area here, look, she went up, she came down. Okay? Up, down, up, down, up, down, up, down, up, down. That's all stocks do. They go up, they go down. I like to buy them when they're down. Okay? When it comes down, I like to buy them. Get my 1% profit. 1% is easy because when you're going from 154 to 166, that is a $12 move. A $12 move on a $150 stock, well, that's on 8%. I'm only looking for one every single week. Now, remember earlier I told you there's 9,646 different companies available? Well, out of all those companies, only about 300. Where are they? Right. Only about 300 that I look at. And I don't look at all of them because today is the 8th. Tomorrow's the 9th, which means 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 companies are paying a dividend next week. That's all I want to look at. I don't want to look at General Electric, Philip Morris, Best Buy, Newmont, Medtronics, JP Morgan, Cisco. I don't want to look at these. I seriously don't. Because just before the dividend is when the stock moves up. Stocks only move for 2 reasons. And don't kid yourself. 2 reasons and 2 reasons only. One is an unknown reason. Hurricane, tornado, act of God, death of a salesman, a lawsuit, something that you can't plan for. Then you have to just react to it. You can't plan for that. But what can you plan for? Earnings reports, dividends, stock splits, seasonality. Let me explain seasonality for you for a second. Winter, spring, summer, fall. There you go. Why do some stocks move differently during different times of the year? Why does Weight Watchers goes up in the first week of the year? Do I really have to say it? Weight Watchers stock goes up the first 2 weeks of the year. Hershey stock goes up the first week of February. Well, what's the second week of February? Valentine's Day. What's 2 weeks later? Easter. Okay. Certain stocks move certain times of year predictably, consistently. Okay, that is what we're looking for. Predictability. To know exactly when a stock is going to move. Now, if a stock moves 2 weeks before the dividend date, well, that's a known reason. What about earnings? Okay, earnings. FedEx, Costco, Kimberly-Clark, Nike, GameStop, Oracle. Stocks have a tendency to move before, what do you call them? Earnings dates. I don't use that information, but I'm just saying it does. Okay, so let's keep on going through these questions. APA, Advanced Auto Parts. Let's take a look at that. Let's see if we can get Instagram work this time. Checking connection. Okay, so somebody wants to take a look at Advanced Auto Parts. And here we go. Take a look. High, low, where was it? Where is it? What's the direction? Up, down, big drop, sideways. It's not that difficult to see. I can get you a third grader in here and point it out. Hey, dude, where's the high? Right there. Where's the low? Right there. It's really not that difficult. Stop making it more complicated than it needs to be. Where's the high? Right there. Where's the low? Right there. Okay, so let's take a look at the numbers. What's the last traded number? 38.79. The closest strike price to 38.79 is going to be 39. Okay, 39. It's going for 63 cents. And if you can't figure out 63 cents is more than 1% of a $39 stock, you want to figure the easiest way? Here, purchase price 38.79. You take the decimal point, move it up 2 places. 38 cents. 38 cents is 1% of a $38 stock. Wow, can it really be that simple? Well, if 38 cents is 1% of a $38 stock, well, 63% is more than 1%. Okay, great. Well, let's take a look at the chart and see if it's the right time to buy. Because the numbers work. I know who the company is. Okay, I've actually walked into Advanced Auto Parts and bought auto parts before. I'm a handy guy. I can actually do a lot of stuff on a car. All right, so let's take a look. A year ago, 52 bucks. The high of the year, 88.44. Look at the big drop right here. Okay, the middle of August. She goes from 62 and drops all the way down to 50. That's a $12 drop on a $60 stock. That's a 20% drop in one day. I always tell people, now this is, I forget who it was who said they had, who was looking for that big jump up in that stock they're looking at, and I said, no way, ain't gonna happen. Yeah, you're up here, you don't take your profits, guess what's gonna happen? Market maker's gonna take it away from you. The market maker is the only person who has control of the opening price. Every other price is dictated by us, the buyers and sellers. Okay, the market maker draws a line in the sand and he says, go. We buy, we sell. We decide what is the high of the day. We decide what's the low of the day. And the last trading day of the day, well, that's the person who comes in last. Because it starts at 9:30 and it ends at 4. Okay, so if you're starting out at 9:30 and 4 o'clock comes around, you're the last person. Yeah, that's the last trade of the day. 38.69. Okay? So always about the numbers. Last 30 days for this company. Here we go. 30 days ago, 40 bucks. Top of the 30-day period, 43.50, down, up, down. Here's the bottom, 36.50. Now we have 1 day to the upside. I personally like 2 days to the upside. So I'm looking at this thing first thing Monday morning. Well, first thing Monday morning, if this is up higher, great. I just might jump in. Okay? Because it's giving me over 1%. And I like over 1%. I'm actually going to write that one down. AAP, and I'm giving it a circle because I like it and everything looks good. All depends on when it opens up tomorrow. Okay. Energy transfer. Horse trading. Energy transfer. I like energy transfer. And it's going to be a no. Sorry, dude. It's at the high of the year. Sorry. It's actually that simple. Why waste our time looking at something that doesn't fit? Don't get me wrong. You can go in your closet looking at all these pretty cool shoes. Try one on. If it don't fit, it just don't fit. Okay? Felix, GM. Yep, GM is on our list. We'll take a look at it. So, energy transfer. Okay, let's take a look at GM because a few people asked to take a look at GM. Ooh, doesn't that look nice? First look, what am I looking for specifically? Okay, I can give you an automatic yes, no, just by 2 seconds looking at the chart. High, low, where was it, where is it? Okay, look at this area right here. Well, here's the high here. She dropped down, came back up, down, up, down. Now she's here, and she closed there, and she bumped up a little bit. So I like this area here. You can't really see it that good on your iPhone or your tablet. But for those few of you that know that this chart here is live on YouTube, and you can actually look at this chart on YouTube, sit in your big comfy couch or your recliner, grab yourself a beer, some popcorn, and just watch the numbers. Because you can't see these numbers on your phone or your iPad, okay? Every single one of these live events that I do is on YouTube. You can actually go and watch last night's recording on YouTube. You can see the night before, the night before, the night before. Every single one since the beginning of January is available on YouTube. They're all recorded. And the reason they're all recorded, because I'm hoping at some time my grandchildren or my great-grandchildren will pick it up and say, how did Papa G do that? Well, here we go. Okay? General Motors. All right, current price, $45.68. The next one's going to be either the $45.50 or the 46. The 46 is going for 93. Well, that's a yes. The $45.50 is going for 118. That's a yes too. Now they're both yeses, and they're both over 1%. But here's the thing: one has a higher return, and one is a safer bet. The $45.50 is already 18 cents in the money. So stocks move three different ways: up, down, or flat, basically go nowhere. So if I do the 45.50s, the stock doesn't have to do a damn thing. If it goes up, great. If it stays the same, great. It can even come down a little bit, 18 cents exactly, and it'll still be fine. Because I'm not looking for capital appreciation. I'm not looking to hold on to the stock. I have no desire to buy anything and hold on to it for more than 30 days. I don't want to buy anything and hold on to it for more than a week or two. That's my preference. Does it always work? No. The longest I've ever held anything is 9 months. That was Kimberly-Clark last year. And I didn't do it on purpose. I bought it, went down, it stayed down, and then it came back up again, and I finally sold it at a profit. Okay, remember rule number 2? Never sell at a loss. Sometimes it hurts. I've seen Target go from 135, my purchase price, down to 102 before she came back up and hit the 135 so that I can get back out again. Okay? So, let's take a look at the chart and see if it looks like a contender for tomorrow. All right, a year ago, 30.58, bottomed out in the middle of November at 26.41. So from 26.41, sorry, talking so much hurts my throat. Here's our top. Our top of the year, 50.58, is that right? 50.50, that's the high of the year, $50.50. And that was right here, in the middle of July. Then she drops down to 39, shoots back up to 50 again, drops to 44, back up to 50 again, drops to 44, now she's going back up again. So let's zoom in and see it. Here you go, last 30 days. Now the reason why I like the last 30-day chart, okay, is the drop. Okay, 30 days ago, drop, back up, hold on. When the stock drops, do you sell the covered call at a lower strike? No, I don't. Never sell at a loss. No, he keeps skipping General Motors for some reason. Funny thing, Antonio, this is General Motors, okay? So I'm actually doing General Motors now. Pay attention. Antonio, pay attention. This is General Motors. Okay, so 30 days ago, we're at 48. Drops down to 44, shoots up to almost 50, very shy of 50. Comes back down, look at the gap down. I love gap downs. The reason why I like a gap down is because they have a tendency to fill. So if it gaps to the downside, it's going to turn around and fill that gap going back up again. So it's a great buying opportunity. So here we are here at the bottom, 44. She gaps up, And again, I don't like gaps because they have a tendency to fill. All right. So is she going up? I like 2 days the upside. So tomorrow, if she goes up a little bit higher, that's a good opportunity to jump in. So I'm writing General Motors for tomorrow. Okay, General Motors. All right, what are we missing? Energy transfer, already did that one. Tap, tap. What the hell does that mean? Mahesh, I use Fidelity, don't want another account. Got it. Thinkorswim does have a lot of good info though. Yes, it does. Video is blurred, can't read numbers. How possibly could it be blurred? Hey, look at that. Instagram is finally working. Cool beans. Why is it blurred? Oh yeah, it does look a little blurred. Display. Let's get rid of that. And let's put another one in there. Okay, I just rebooted the video, so see if it clears up any on YouTube. Oh, you know what? Here we go. Let's do this. YouTube, broadcast, live. Yeah, it is a little blurry. I'm gonna have to figure out why the hell that is. Okay. Hey, there's me. Yep, it's a little blurry. Hold on. Yeah. Okay. All right, let's get out of that. And let's get out of that. And let's go back to here. All right, that being said, so GM is a possible trade for tomorrow, in my humble opinion, for me. It's not a tip, it's not advice. I'm just saying, 30-day highs here, she drops down, here's the 30-day bottom, and she's bouncing off of that. If she goes up one more, then I'll probably jump in. Okay, so Sweetie Swag, I understand you don't want another account. Great, not a problem. Now, I don't know anything about Fidelity, and I don't know what Fidelity has and what they do not have. How often do trades go south for the average trader? Every day. Every day. You're going to buy something, it's going to go up. You're going to buy something, it's going to go down. The idea is follow the trend. Okay, if we're all buying at the same time, well, the stock is going to go up. Well, here's the high, here's the bottom. Well, what happens at a bottom? Well, what happens at a top? Well, once it gets to a top, people start taking profits because it's not a profit until you take it. And once you take your profit, well, that forces the price to come down. See what happened? Forces the price to come down. And when it gets to a certain point, right here at 44, you got investors that say, wait a second, General Motors at 44, that's a great buy. Let me buy some. So we start buying it at 44. And what happens? The price slowly goes up until it gets to a certain point where the investors say, wait a minute, that's too high. Let me take, and it's a repeating process over and over and over again. Okay, Mahesh, open a Schwab account with 50 bucks and you can use Thinkorswim. That's a great idea. Alrighty, sweetie, if you are just buying to get the dividend, why do you need to buy 100? Okay, Sweetie Swag, okay. Sweetie Swag, what you're missing something, okay? Now, I gave you 2 trading strategies. I usually just give you one. For those people who don't have a lot of money, you use the dividend capturing 2.0 strategy, which I explained to you a little while ago. Buy it 2 weeks before, catch that dividend, get out. Then go find another stock. Now, the reason why I use the dividends is because stocks have a tendency to go up before the dividend date. Now, with 100 shares, I showed you this a little while ago. Okay, what one were we looking at? We were looking at General Electric, right? GE. Okay, now, Sweetie Swag, we were looking at General Electric a little while ago. Now, this is why okay, wait a second, General Electric right there. Okay, see this General Electric right here? Look at the dividend. The dividend is 28 cents. So if I'm buying the stock for $189, to capture a 28-cent dividend, okay, to me that doesn't make sense. Why not capture, well, hold on. Why not buy 100 shares at 189, at 186? Sell it to someone for the exact same price I paid for it. This way I could care less if the stock price goes up. And they will buy it from me for the exact same amount. So if I buy it for this amount, sell this, they're buying it from me, and they're giving me $2.30 a share. Thanks, bud. Stay safe through the storm. Yeah, well, I'll be live broadcasting during the storm. We'll see how it works out. I'm sticking it out. You know, I figure if the old man wants to take me, he's going to take me no matter where I'm going. So, Sweetie Swag, does that make sense? Okay, if you don't have enough money to buy 100 shares and do the covered calls, there's always the dividend capturing 2.0 strategy, where you buy the stocks 2 weeks before the dividend, capture the dividend equivalents, and in this instance, it's 28 cents. So as soon as the stock goes up 28 cents, you sell it, and then you move on to the next one. Because after the dividend, stocks have a tendency to go down. Get in, get your profit, move on to the next one. Because it's not a profit until you take it. Okay. We're at 11:29. So if you guys like, comment, share, all that crap, and get the audience up to over 200, I'll stay a little bit longer. Okay, but if it's not over 200 at 11:30, I'm out of here. Anyway, let's keep on going. Angel, Evo. Scotch, thank you for that. Evo. EVO. What the heck is EVO? EVO. Anytime I have to say what the heck is that, it's usually a no. This one has no options, so no. Market opens at 9:30 a.m. You're absolutely correct. Chief, I have my quarterly dividend check automatically reinvested to buy more of the same stock. Well, Chief, there's absolutely nothing wrong with that at all. That's called the DRIP, Dividend Reinvestment Plan. Nothing wrong with that. Okay, so where do I see the flaw in this plan? Chief, here's where I see the flaw. Okay, so let's take a look at AT&T. So let's say hypothetically you have money in AT&T, and that's where your money is. Okay? So let's say, Chief, hypothetically you have AT&T and you take all your dividends and you reinvest them. Well, here's your dividend right here. $1.11. Now you have to divide that by 4 because they pay it quarterly. So every quarter you don't get 111. You get like 42, 43 cents every quarter. And that rate of return is 5%. 5% per year. Okay? So at 5% per year, there's absolutely nothing wrong with it. As a matter of fact, I love people like you guys because you keep buying and you just keep holding. Nothing wrong with that at all. I'm not looking for 5% a year. You are, I'm not. I'm looking for 50% a year. 1% a week is 50% a year. Okay? If you're buying AT&T, you're getting 5% per year. But there's nothing wrong with that. Other strategies too. I'm sure there may be tax reasons. We don't talk about taxes, but redneck, remember that? Starts at 9 a.m. You can put orders in prior to the opening. Yep. But they won't execute till 9:30. Well, yeah, that makes sense. Doing options for a year, learning every day. This strategy is for cash flow. Absolutely correct, Mash. Yep. Ivan wants to do Hormel. See, Ivan, you're picking stocks that... Best strategy. You like that one? Thanks. Okay, Ivan, you keep picking stocks that have not very good premiums. Now, don't get me wrong. Hormel's a great company. They're dividend king. They've increased their dividends for more than 5 decades, 50 years. Okay? 31.56 to 31.50 to go for 20 cents. I don't think I've ever bought Hormel because Hormel, the premiums on the options are always under 1%. Stifler's mom, dude, how are you doing? I don't like to do anything until 10. What do I think about Altria? Austin, I love Altria. Let's see what the numbers look like. Interesting. High, low, where was it? Where is it? What direction is it going? $50.09. The 50 is going for 46. The 50 not quite 1%. Sorry. Ooh, what about Intel? Now, Intel has some good numbers. INTC. Okay, again, high, low was is direction, and 22.55. The 22.50s are going for 63 cents. That's more than 3%? No, 2%, like 2.5% for Intel. I grew up. I know who Intel is. I got somebody here talking a language I don't get. Sorry, dude, whoever that is. Yeah, whatever. I don't understand any of that. But I do understand BWE. That's about the only thing out of all that I can understand. So let's take a look at Intel. Because the numbers work, great. I love the fact that the numbers work. But is it the right timing? Is it the right time to buy? Here's the high, here's the low. Look, it bounced off the bottom here. So what's happening right here? Let's zoom in to find out. But before we do that, a year ago, 35.23. Topped out at the end of the year at 51.06. Look at this big drop. This happened at the end of July. It went from 30 all the way down to 22. That's a $12 drop on a $30 stock. Hello, 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 you guys over on Instagram. Hello. So anyway, here's the big drop. A $12 drop on a $30 stock. That's a big drop. A $30 stock, $12 drop. Yeah, that's big. So anyway, last 30 days. Here we go. Last 30 days, check it out. 30 days ago, we're 18.50. That's the bottom. Actually, it's like a triple bottom. Shoots up. Here's the top, 24.50. Pulls back, 21.50. It's a $2 drop. Now she's going back up again. Well, the bottom of the year is here. A little bit of retracement right there. Great time to buy if she opens up higher tomorrow. Okay, so we'll be looking at this thing first thing in the morning. 22.55, the 22.50 is going for 63. That's more than 2%. I'm going to write that down tomorrow. Intel, INTC. Okay, that's a good one. All right, guidance, how are you? I missed some Intel. There we go. Okay, now I don't understand this language here. But I do see BWE. BWE. Broadwind. Yeah, that's going to be a no, dude. Sorry. Okay, let's keep on going. What's your candle set to daily? Yeah, it's set to daily. I look at hold on, end of day data. Okay, I don't really care about what happens during the day. I know it's weird. Okay, I'm only looking. The strategy is so simple. I don't want to sit in front of my computer during the day. I only care about what is the current price. What strike price is closest to the current strike? What premium am I collecting? Is that more than 1%? Great. If it is, I want to take a look at the chart. Is the chart telling me it's the right time to buy? Well, here's the top, here's the bottom. Okay, right now this is AT&T. It's a no for me because it's at the high. I don't buy at the high. What am I going to do? Buy at the high and wait for it to go higher? No, I don't want to do that. I want to buy at a low and take the high. See? Low, up, down, up, down, up, down, up, down. There are plenty of moves. I can keep my eye on AT&T. Okay, look, it's plain and clear. Look at it. Down, up, down, up, down. As soon as she comes down here just a little bit more, that's be about somewhere on next week or the week after. That's where I want to buy, right there. And as she turns around, goes back up, that you're going to make your money buying low and selling high, not buying high and waiting for it to go higher. That just doesn't work. TikTok funny videos. What do I think about BCAT? I never heard of it. NVDA is the best dividend. It pays every month. Oh boy, I love it when somebody says that. Now, Hammond, you're new, so I'm about to pick on you right now. So buckle up, Buttercup. Here we go. NVDY, really? NVDY. Number one, it's a monthly. Okay? Current price is $24.62. Closest strike price is going to be 25. I'm getting 10 cents. That's not even 0.5%. Why the hell would I buy something that offers 0.5% for 2 weeks? Okay, great. What is the next one going out? 24, 25. Okay. Let's go 2 strikes out. Okay, I mean two months out. The 25 is going for 20 cents. Not even 1% for how many? 40 days. How many days is that? That's 5 weeks. 5 weeks for not even 1%. What the hell would I want to buy that for? But wait, it gets worse. Here we go. The reason why I say it gets worse because someone was stupid enough to request this stupid piece of crap a long time ago. I shouldn't be saying that. If you like it and you want to buy it, be my guest. But let me just show you the numbers. NVDY. Yield max, NVDY. Okay, check this out. That looks sweet, doesn't it? 74% yield. That's awesome. Year-to-date total return, 98. That beats me. But here's the problem with that. Okay, here's the problem with that. Go to dividends, dividends only, maximum. Okay, you ready? Here's the problem with it. The first dividend was June 2023. 75, 96, 81, 93, 68, 42, 51, 63, 153, 262, 120, 256, all over the place, up, down, up, down. It's only paid dividends for 1 year. The reason why you're getting such a high dividend and rate of return, because they're sucking you in to buy this piece of crap to hold it. It's only been paying dividends for 1 year. That's it. Can you look at CVE? What the heck is CVE? CVE. When I say what the heck is something, okay, CVE is a definite no. Reason being, not even 1 year. Wait a minute, June. Yep. 1 year, 1 month of dividends. That's it. 1 year? Yeah, no thank you. I don't do stocks unless they have 20 years. I missed some. Where was I? PL. Wow, I missed a lot of questions. Oop, here we go. All right. Dude wants me to take a look at BCAT. What the heck is BCAT? BCAT. Yeah, sorry, dude. Who came up with BCAT? TikTok funny videos? BCAT has no options. That's a no. Something Wong. Nice to see you. Nice to see you too. Good to go. Cool beans. Have a good day. You too. See you later. You too. Cool beans. Bloomberg Terminal has great data on this. Cool. Send me the link. I'll give you my opinion. But I almost guarantee that Bloomberg doesn't have what's called a trigger trade. You know, set it, forget it, not have to worry about it when I'm checking on. Now, they could have a dividend calendar. Don't know. They could have everything. I really don't know. What's your process of doing research on a company? Okay. Are you into BP, British Petroleum? I love British Petroleum. I don't have any at the moment because their dividend is not ready yet. Because I look at, me personally, I look at companies when the dividend is coming out. Adam, how are you? All right, so let's keep looking. So, pal, you want to know my process of researching on a company? Okay, I hope you got a pencil, piece of paper. This is really good stuff. You ready? Write this down. Google search Dividend Kings List 2024. It's like 54 companies that have increased their dividends for 50 years. Stop loss is making me hard to take how to overcome that. I don't do stop losses at all. I don't. Number one, never buy a stock you don't want to buy and hold on to. Why are you use stop loss if you're buying something you want to hold on to? Number two, never sell at a loss. Defeats the purpose of investing in the first place. Okay, so back to the list. Dividend Kings List 2024. That's 54 companies that have increased their dividends for 5 decades. That's 50 years. Second, Dividend Aristocrats List 2024. 67 companies that have consistently increased their dividends for 25 years or more. Dividend Champions List 2024. 150 companies that have consistently increased their dividends for 25 years. The rules are a little bit different between the champions and the aristocrats, but still 25 years of increased dividends. The Dividend Contenders, 300 companies that have increased their dividends every single year from 10 years to 24 years. Okay? And then I throw in, just for the fun of it, Warren Buffett's Stock List 2024. It's good enough for Warren, it's good enough for me. That's the way I look at it. Now, those 5 lists right there will give you over 300 good quality companies that have consistently increased their dividends. Then I take that list and I cross-reference it with the CBOE, Chicago Board of Options Exchange, to let me know which of those stocks have weekly options and which of those stocks have monthly options. Okay? Simple. That's where I do my research. After I get that, then I go in and I take a look at book value. Because I do not want to buy a stock for $120 that only has a valuation of $2 per share. Don't want to do it. Okay, I like to be a little bit closer. Now, I'll buy a stock for $50 if it has a $20 book value, but I don't want to go more than 3 to 4 times the book value. Big City Theo, you don't understand not about capital growth. Thank you, Bama Redneck. You are, alrighty then. I like some of those things you put in there, Redneck. Way to go. All right. Guidance, hello, PLL. I have no idea what PLL means. Current strong 3 stocks. Well, I like Macy's, Nordstrom's, and Kohl's. Andy Panda, how are you? Look, I finally got Instagram to work. Imagine that. All right. Is there an easy way to find stocks with weekly option? With weekly dividends? No stocks have weekly dividends. How do you see your calendar for the upcoming dividend stocks? Well, you join the morning trading group. Morning trading group gets a list every Monday morning of the stocks that have dividends coming up and the ones that we're taking up for consideration for the week. That was a mouthful. Other than that, you can just go this way. You can just go this way. Take a look at the stocks I've already traded. Okay? Intel, Macy's, Marathon, Dell, WBA, Riot, MPW, Walgreens. You can do that way. That works too. Okay, BCAT has no options. That's going to be a no. All right, Matthew Knight. Nah, I only invest in TPVG. I never even heard of that. TPVG. Temple Point Venture. Why the hell would you invest in that? Doesn't make sense. Okay, wait a second. I'll give you the benefit of the doubt. Let's take a look at the dividends, see how well they pay dividends. Do they actually share their profits? TPVG. Okay, so TPVG has been paying dividends for 10 years, a decade, 1 decade. I personally like 2 decades, but Matt, let me give you the benefit of the doubt. And let's take a look at how the profits look. Now, I could go in and take a look at the earnings reports, the quarterly reports, or the annual reports, or I can just say the hell with all that crap and go straight to the dividends. Why the dividends? Because a dividend is the portion of the profits that companies give back to the investors, and that's you and me. If I buy this company, I become a owner of the company. I own a small piece of the company, and I'm entitled to the dividends. So how often have they increased their dividends, or how often are they profitable? So let's take a look. 2014, 9 cents, 30 cents. Well, that's a nice jump. 32, 36, 15. They cut it more, 60%. Are you shitting me? A 60% drop and you think that's good? Okay, 36, 36, 36, 36, 36, 36, 36, 36, 36, 40, 30. Okay, so basically, for all these years, from 2015 to 2018, no, then they dropped it to 10 cents, then back to 36, 10 cents, and to 36 again. So yeah, what is that? 7 years of no increase? Ask me what. Why the hell are you investing in a company that's not consistently profitable? That's like, all right, I put money into a company and they give me $100. Great. Next year they give me $100. Okay. Next year they give me $100. What the fuck's going on? Next year they give me $100. Next year they give me $100. This thing hasn't increased. Never mind. I'm not even going to bother. Okay, WBA, I have that one. AT&T, we already talked about that one. That's a good one. So that's two good ones. WBA I like, and AT&T I like. GEMSF. What the heck is that? GEMSF. No dividends at this point whatsoever. Okay, so you're one of those investors who buys just for the sake of buying, and it's at 1.5 cents per share. Okay, definitely speculation. Okay, you have fun with that, dude. All right, Angel, we were looking at Evo. It was already a no. So, Sweetie Swag, I just told you how to find dividend stocks that have weekly options, not weekly dividends. There's no company that offers weekly dividends. They're weekly options. Okay, no options. That's a no. Thank you. Tino, hey James, your small picture on YouTube is frozen and the microphone has no sound. Holy shit. Well, let's take a gander. Audio input. Hello. Let's fix that one. Audio input. Okay. Oh, crap. What the heck? It's not even working. What? USB. Okay. Hello. Oh, it's not working. Shit, double shit. Alrighty. Let's get this camera out and see if we can get it working. I think it might be time for a new computer and camera. I'm on YouTube and it's working fine. Uh-oh. Well, I already disconnected it. So let's get it working properly. This is why I need an AV person in here to take care of this crap for me. Okay. There we go. Now, audio. Yep, there's the audio. Video, nope, not moving. Video capture, let's delete that. Okay, let's start it again. Video capture. Okay, and we're gonna go here, and we're gonna go there, and we're gonna go there, and then we're gonna do this thing right here. Whoops, nope, not that. We do this. Oops. And then we do this right, whoops, no. All right, that should be big enough. There we go. All right, well, that ought to do it. Yep, I'm moving. Okay, hopefully that fixed that problem. All right, so TPVG, yeah, that's a no. Sorry, dude. Google just sold mine. Google's a no. They haven't paid dividends long enough. All right, Dina, we've actually looked at GM. It looks good for tomorrow, but that's not it. That's not a recommendation. What stock program are you looking at? Okay, Reed, this is not a stock program. This is Think or Swim. It is a trading platform owned by Charles Schwab. Okay, so let's take a look at some more of these questions. Albert, how does one look at these recordings on YouTube? You go to YouTube and go into the10minutetrader.com and you look at, well, actually, where is it? Hold on a second. Come on, all the way up. Come on, damn it. Okay, YouTube. Hold on, it's popping up, youtube.com. There it is, the10minutetrader.com. And then you look at videos. See, right now it's live streaming. Okay, live streaming. Up, and there's all my live streams right there. See them all? There they are. Oh, yep, there's the smaller ones. Videos. Okay, there they all are. See them? Whole bunch of them. Okay, that being said, let's get back to where we were. Okay, hopefully that answered your question. What platform we're using, we already did that one. Think or Swim. All right, thanks, Albert, the 10-minute trader on YouTube. Yep. How are you listed on YouTube? The 10-minute trader. There you go, right there, 86, thank you. CAPR. Oh, fuck off. Cool beans. Let's take a look at it. Uncle James the Goat. Tell you how it is no filter. Okay. All right, Charles, we'll take a look at Dollar General as soon as we take a look at fuck offs. CAPR. Interesting name, dude. CAPR. Capricorn Therapeutics. Really? That's a no, dude. Terribly sorry. Number one, look at this shit. That's going to have major pullback, number one. Number two, it's a monthly. Okay? So when I say I do weekly options, I can't do weekly options with a monthly optionable stock. Now, you may like it. Okay? You may have bought it a couple of weeks ago at 4 or 5 or 6. Okay? But now it's at 22. So it's not a piece of advice. It's something that I learned over the years. Okay? If you bought it down here at the 4 or 5 area, and now it's currently at 22, okay, I can't tell you what to do, seriously. But here's something. It ain't a profit until you take it. And then, nobody ever went broke taking profits. That's just my, that's just my take on it. Okay, so that's that. Thanks. Chet Donnelly, that's your opinion. Ooh, what did Chet Donnelly have to say? I have no idea. What the hell did Chet Donnelly have to say? I have no idea. I don't find it in there. Okay, whatever. 86. That is your opinion. Thank you. All right, Charles, you want to take a look at Dollar General? I love Dollar General. I do. DG. Dollar General. Cool beans. Ready? First thing, I want to take a look at Dollar General. The high, the low, where was it? Where is it? What direction is it going? Okay? Now, if the stock is right here at this moment in time, bouncing off the bottom, it's currently at 84.49. Well, the closest strike price to 84.49 is going to be 85, or the 84, one or the other. Now, the 85 is going for 85, which is 1%. The 84 is going for 129. That's 1% also. Now, the 84 is going to be a safer bet, but the 85 will be a little bit more profitable. Okay? We the people, we already looked at General Motors. Luke, you think Buffett is an inside trader considering his dad was in Congress? I didn't know his dad was in Congress. I really don't know. Buffett has a different way of looking at things. He only buys the best. If you take a look at Buffett's story, when he was younger, he lived very frugally, and he still lives frugally. He invested 70% of his income. 70%. And some of these people out here won't even invest 10 or 15%. The dude invested 70% of his income to get to him to where he is today. Okay, do you really need everything you buy? Do you really need all that? No. Why don't you take all your money, invest it? Because here's the thing. No matter what happens, you are going to get older. You are going to retire. The money in your retirement account is going to have to last you for the rest of your life. You have 3 opportunities to retire, and only 3. I'm aware about getting all rich people to invest with him. Yeah, that was cool. But think about it. If you take all your money and you keep investing all of it, and all of a sudden your account goes from this to that. People don't look at rates of return on a yearly basis. They look at how fast you've grown. They don't know you've taken 50 to 70% of your money and invested. They don't look at that. A lot of people don't look at the fine print, which is a perfect example here. Some people looking at VOO and SCHD, they don't even look at the numbers. Okay, VOO, SCHD, they have no, never mind. Don't even get me started on that one. But take a look at the numbers. Does it make sense? That's it. Okay, what are we talking about? We're at Dollar General. Let's take a look at Dollar General, okay? Okay, here's the high 170. She's dropped down to 84, 84.49. So, 84 or the 85, either one will give you 1%. One's a safer trade, one gives you a little bit more money. Fine. Well, let's take a look at the numbers. Just because the numbers work, it doesn't mean it's the right time. So let's take a look at the chart. Now, this is a 1-year chart. Okay? Every chart, I look at the exact same thing. The high, the low, the open, the close. Wait a minute, no. The high, the low, where was it a year ago? Where is it now? Okay, this is the 1-year chart. So on the 60-day chart, it's the same thing. High, low, where was it? Where is it? What direction is it going? All right, so a year ago, 104.52. High of the year, 168.48, and that was the middle of March. Look at the big drop it had just a few weeks ago. Okay? The end of August, it goes from 125 all the way down to, what is that, 85? Is that right? Yeah, so from 125 to 85. Or no, to 83. Holy cow. So 125 to 83 in one day. So if you don't take your profits, I don't know who this one is for, but somebody out there is looking at a big, huge profit. You don't take your profit, look what the market maker is going to do. He's going to take it away from you. And don't think that it won't happen. Don't think that's not fair. It's all bullshit. If you don't take your profits, he's going to take it away. Give him an opportunity. All right, anyway. So here's the bottom right here on the 5th. Okay? The 5th is the bottom. Up, down, up, down, up, down. Now she's going to the upside. I love going to the upside. I love Dollar General. The numbers all work. I'm actually writing Dollar General down for tomorrow. All right, so Dollar General's written down for tomorrow. Are you able to figure out why it dropped so fast? Well, usually it's because of the market maker. The market maker is the only person who controls what the stock opens at. And if you think he has your best interest in mind, that's a hell no. Uh-oh. Why does that thing keep turning off? Having issues with Instagram. All right. So, I want to wait until tomorrow morning. What percent up are you take profits? 1%. I already told you that. I'm looking for a 1% profit. Okay, Charles, we're on Dollar General right now. Let's keep going. Where can I find your criteria for buying a stock and how you calculate the percentage of gain? Scotch, can't believe you're asking me these questions. My criteria, are you ready? Hope you got a pencil and paper. You ready? Here we go. 20 years of increased dividends. 20 years of increased dividends, weekly options. That's the 2 criteria. That's it. How do I figure out the percentage of gain? 84.49. Okay? 84.49. That's the current price. 1% of 84.49 is 84.5 or 85 cents. So if the option is worth more than 85 cents, well, that's what I want to buy. That's my 1%. That's all I'm looking for. Anything over 1%, great. Anything less than 1%, no thank you. That easy. What am I looking at tomorrow? Flipper, how are you today? You ready? I'm going to go through this really quick, so I hope you know what? It's recorded, so you can listen to it over and over again. Ford, JP Morgan, Kohl's, Wolf, PLCE, VASO, Marathon, Advanced Auto Parts, General Electric, not General, sorry, General Motors, Intel, Dollar General, and then a bunch more. It's only 10:30. Jules, it's 11. But we'll keep going. I'm not done yet. Moderator. Bum, bum, ba-dum, bum, bum, bum. PLL. All right, see Miami, PLL. What the heck is PLL? PLL. And if I have to say Piedmont Lithium, $1.19. No, $11.90. Okay, see Miami, it's going to be a no. I don't do monthly optionable stocks. Okay? Bet it all 76, BITX. I can say no now, BITX, or I can bring it up. We can take a good look at it, and then I can say no. Okay, the reason why I don't like BITX, BITX. Here's your reason right here. BITX. 1, 2, 3, 4, 5. 5 months of dividends. 97, 86, 68, 63. And the dividends are going down. Why the hell would I buy something that only has not even 1 year of dividends and they're consistently going down? Sorry, I like companies that are increasing. Okay, if the dividend is increasing, the only way the dividend can increase is if the company is increasing its profits. No increase in profits, no increase in dividends. It's actually that simple. Yeah, and I don't care that it pays 62 cents a share. It has nothing to do with how much the share price is or how much profits per share. See if you can understand this. I honestly don't care about how much the dividend is. I don't. I care about the consistency of the increase of the dividend. How consistently, do I like DeSantis? Sure, why not? I'll invite him for dinner. Why the hell not? My interest is the consistency of the increased dividends. Because if the dividend increases, it means their profit increases. Dividend starts to going down, people start selling too. Hit from both sides if you hold. Yeah, Luke, I'm going to agree with you. If the dividend goes down, people are going to run away from it. If the dividend keeps going up, people are going to keep buying it. If the company is consistently profitable, the dividend will increase year after year after year. If they're not profitable, the dividend will decrease, or it will go up, it will go down, up, down. Yes, consistency, profitability, simplicity, and safety. Those are the 4 things I'm looking for. When the stock drops next week, you sell an option at a lower price and get 1%. I'd like to think that, Shannon, it's not always the case. Okay, so this week, yeah, it's over 1%. Great. Next week, if I don't sell it, it might not be over 1% because it changes all the time. We don't know. I'll quote John F. Kennedy. We cannot answer the questions of tomorrow with the knowledge we possess today. That means I have no idea what the stock's going to do next week. My main concern is what is it doing this week. If it's at 27.34, I sell the 27.50s. I get 1.35%. I mean 1.35, $1.35. Well, that's way over 1%. But I'm not doing this stock because it doesn't have any. It only has not even 1 year of dividends. Yeah, no. So I don't know if it's profitable. And it's 1 year old. Well, how the hell am I supposed to know if it's going to be around 5, 10, 15 years? Most companies don't make it past 3 to 5 years. Okay, 1 in 10 be lucky to get to 5. 1 in 100 be lucky to get to 10 years. Anyway, let's continue. BTIX is a no. Sorry, dude. What is this? What is this? BD Slim. James, I like your strategy. No way I can do this before, after, or during my work schedule. Well, actually, I'm going to prove you wrong, dude, because you're here right now. You can actually watch this. You're going to love this. You ready? We'll use this one as an example. No. Let's use Macy's because I like Macy's. Okay, here's Macy's right there. 1580. Great. I like the 1580. We'll do the 1550s. We're going to change it to covered stock. There you go. And I want to do the 16s. There we go. Right there. Now let's say I want to do 300 shares. 300 shares at the market. Boom, here you go. Here's the trade. You ready? Buy 3 covered calls, Macy's 100. So those are the weeklies. 11 October 24. That's next Friday. Okay? The $16 call against the Macy's stock, which means first thing Monday morning. This is a set it and forget it trade. Set it and forget it. First thing tomorrow morning, I'm buying 300 shares of Macy's at the market as soon as it opens. Also, as soon as it opens, I am selling the $16 call option, giving somebody the right to buy it from me at $16. Well, currently the stock's at $15.80. Great. So, my break even is $15.56. Well, that's a hell of a lot less. My profit is $132. Well, the maximum trade is $4,600. Well, take the profit, clear, 132, divided by the purchase price, $46.69. It gives me a rate of return. Are you seeing this? 2.8% rate of return. All I have to do from here is click the send button. Okay? And it automatically gets sent to the market maker. First thing tomorrow morning, there you go. I'm proud owner of 300 shares at the market open. I've also sold the option to whoever the hell bought it. Do I care who bought it? No. All I care about is what am I getting? It's already, now when you do a covered call, you're buying the stock and you're selling the option at the exact same time. It's a 2-for-1 trade. Two trades, buy the stock, sell the option in one trade. I just did it just now. So tomorrow morning when the market opens at 9:31, I'm going to own 300 shares of Macy's. Then someone is going to buy it from me. Let's go here. No, activity and positions. Let's go here. All right, working orders right there. Here it is right here. It is a working order. It is sitting there waiting for the market maker to open up in the morning, and it automatically fills. So don't give me the BS that you cannot do it with your time schedule. Okay? First, you got to find a good company. Well, you get the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's over 300 to choose from. You jump into a calendar. Okay? What stock is paying what? Well, tomorrow, CME, which is Chipotle, FedEx, Occidental Petroleum, Hewlett-Packard, Kohl's, NE, Nextera, Nvidia, Devon Energy, Coca-Cola, Macy's, Novastar, and WMB. What the fuck is WMB? William Bradley, I think. William something. Williams Company. I was close. So all these companies here are paying their dividends next week. Simple. You just go Occidental Petroleum. Let's take a look at that one. Whoops, let's get out of there. OXY, Occidental Petroleum. We want to change this to signal right there. Here you go, Occidental Petroleum. High, low, was, is, what direction is it going? Where's it currently at right now? 55.82, the 56 are going for 84 cents. That's over 1%. It's really not that difficult. So you like Occidental Petroleum? Great, let's trade it. Okay, let's go here, do a covered call. Let's move this over. The 56s right here. Cool, let's get 200 shares. 200 shares at the market. Okay, confirm and send. Buy 2 covered calls, Occidental Petroleum, 11 October 24, that's next Friday. The 56 call against the stock at the market to open. Here's the profit, $2.219. So, Clear 219 divided by how much is it costing me? 10,982. 10,982. It gives me a profit of 1.99%. The first trade was over 2%. This one is 1.99%. Okay, if I hit the send button right here, it's going to send it to the market maker. So tomorrow morning, first thing in the morning, it will open up. This profit will go into my account instantaneously. Because when you put it at the market maker is required by law to fill it instantaneously. Now, considering the stock and the option are tied together, that's my profit. Simple, safe, predictable, consistent. It's all right there. Simple, I just walked you through the whole thing. Safe, well, if you don't know who Occidental Petroleum is, don't buy it. It's an oil company. If the numbers don't make sense to you, don't buy it. It's that simple. Hi, how about Intel? Ooh, Dina, I love Intel. Let's do a quick one on Intel. Delete. Come over here. Get rid of this. It's there, and let's put Intel. INTC. Here we go. High low was his direction. It's bouncing off here. Cool beans. 22.55. The 2250s are going for 63 cents. That's over 1%. Great. So let's do this. Go to covered call. Well, last 30 days. Here we go. Last 30 days. High, low. Where was it? Where is it? The direction up, down. Now she's going back up again. All right. So at the 2250s, let's get out of that one. 2250 right there. Let's get out of that. Let's do 400 shares. It's cheap enough. 400 shares at the market. Boom, boom. There you go. Okay, here we go. Buy 4 covered Intel. The weeklies, 11 October 24. Expires next Friday. 22.5 call against Intel. We already looked at it. It's 22.50. Those are the numbers. At the market to open. Well, here's the break even, 21.90. Well, it's currently at 22.55. My break even, cool. Profit, 240 bucks. So clear that, 240 bucks. Divided by the purchase price, 8,726. That gives a grand total of 2.75%, 2.75. That's 3 trades I just gave you. One for 3%, one for 2%, and one for 2.75. Don't tell me it's not easy and that you can't do it because your schedule. Every single trade I made for the first 10 or 15 years, I did at 5 or 6 o'clock in the morning when I got up. I looked at the stock. Does it look right? Do the numbers work? Great. Do I like the company? Intel. Either you like the company or you don't like the company. Rule number 1, never buy anything that you do not understand. Never buy anything you do not want to hold on to for a long period of time because you just might have to. Is there any guarantee it's going to go up? Nope. None whatsoever. But here is a guarantee. Okay? Hold on. The best thing you can do is the right thing. The second best thing you can do is the wrong thing. The worst thing you can do is nothing. You can make excuses all you want. Okay? I've been around, I'm 60 years old. I've heard a lot of shit. I've heard a lot of excuses. You can tell yourself whatever it is you want to believe. Okay, this trading strategy was created for my 9-year-old daughter. 9 years old. It had to be simple, safe, predictable, consistent, and no way that she could lose. That's the 5 criteria I had to overcome to create this trading strategy for her. The rules are simple. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options are a must. I'm looking for weekly cash flow. That's simple. And number 5, make sure the numbers work. Well, the numbers, we know what they are. What am I buying it for? What strike price am I selling? What's the premium? Is that 1% or more? Great, wonderful. Now, what's the chart telling me? Well, 30 days ago was the bottom. Here's the 30-day high. She came back down. Now she turned around. Now she's going back up again. It was created for a 9-year-old. Please do not make it more complicated than it needs to be. It was created for a 9-year-old. Everybody here should be over the age of 18. It should be, oh, that makes sense. Because it does. All right, I got a question here. Buff, if your contract doesn't get exercised for the week, do you adjust your strike price lower for the next week? Or do you always sell the same contract price every week? That's an awesome question there, Buff. Here's my answer. I cannot answer the questions of tomorrow or Friday afternoon with the information I have today. What does that mean? Well, Monday I buy my stocks. Great. Tuesday I take a look. Wednesday I take a look. Thursday I take a look. Friday at 3 p.m. I jump on and then I decide where is the stock price? Where is the strike price? What's the valuation? What's the pros? What's the cons? Do I let it go? Do I let it expire? Do I roll it into next week? Okay, those are questions I can only answer on 3 o'clock on Friday. But on Monday, what am I looking for? I'm looking for a company that I understand, a company that I know, a company I have no problem whatsoever buying, and I will buy it. I will sell a covered call, which gives somebody else the permission or the right to buy it from me for the exact same price. Why the hell am I buying it at $22.55 and selling it at $22.50? What sense does that make? It makes no sense whatsoever. But I'm collecting the premium, and the premium is more than 1% of the purchase price. So I'm collecting a safe, predictable, consistent 1% per week, and that is my goal. I use the dividends to tell me when the stock is going to move, because all the good stocks move up just before the dividend date. So if I buy it just before the dividend date, grab my 1%, say, great, I'll see you again in 90 days, because the same stocks pay a dividend every 90 days. There's 13 weeks in every quarter. Quarter 1, January, February, March. Quarter 2, April, May, June. Quarter 3, July, August, September. Quarter 4, October, November, December. So you don't collect a dividend. Okay, Donald, how are you? So you don't collect dividends if it sells right away after you buy it. You're absolutely correct. I don't. Here's why. Okay, take a look at that. General Electric. Okay, we all don't, please, do not tell me you don't know who General Electric is. I ain't going to buy it. I really don't give a shit what your answer is. If you don't know General Electric, you must be living under a rock. General Electric has its dividend on the 26th. The dividend is 28 cents. Follow me if you will. Okay, if we go to General Electric, okay, currently the price for General Electric is $186.98. So the closest strike price would be $187. Well, the $187 is going for $2.30. Now, you need to explain to me, why would I buy a stock, hold on to it to collect 28 cents, when I can buy it for $186.98, sell it for $187, and collect $2.30? I honestly really don't care about the dividend. The dividend only tells me when the stock is going to move. It's actually that simple. All right, PPL, we don't like that one. Bum, bum, bum. Okay, Jeff, what time zone are you in? Okay, Jeff, totally irrelevant. I have no control whatsoever. The stock market opens up at 9:30 a.m. I jump in at 9. That way, everybody who's actually in my, gotcha, that makes sense. Donald, I'm appreciated. If I only get to one person tonight, that's you. It makes sense. That's awesome. It does make sense. Think about it. I know who General Electric is. I've grown up with General Electric. Almost every single light bulb I changed had a big GE on it. Okay? The toaster oven. You know, the little toaster? Yeah, big GE on it. I used to have a refrigerator. GE, General Electric. I know who they are. I have no issues whatsoever buying General Electric and holding it for the rest of my life. But what the hell do I want to do that for? If I can get 1% every single week from General Electric, it does it 4 times a year. They have their dividend 4 times a year. So I trade General Electric 4 times a year. That's it. I get 4%. Well, what do I do for the other 266 trading days? But we have to have enough by 100 shares. Yes, but Donald, after you collect your premium are your options exercised. That's a tough one to call because sometimes they do get exercised, sometimes they don't. Sometimes I hold them for a week, sometimes I hold. The longest I've ever held anything was 9 months. And that was Kimberly Clark. But Kimberly Clark, I got 3 dividends. Okay, 9 months. I collected 3 dividends and over, I think, close to 30 different premiums. Now, the premiums change every day, okay, and every week they change. So this week I might get 230. Next week I might get 128. The week after I might get 66. The week after I might get 380. It changes every week. So rule number 1, never buy something you don't want to hold on to. Rule number 2, never sell at a loss. So as you can see, she went up, she came down, up, down, up, down, up, down, up, down, up, down, up. Where do you think she's coming next? Well, more than likely she's going to come down. So if you look every single day, I look every day, I look twice a day. Now, I've been trading for 20 years. So for 19 years, I only looked once a day. Well, now I look twice a day. The reason I look twice a day now is because I'm sharing it with you good folks. I first learned how to do a live broadcast, which is what I'm doing now, in January. Okay, it took me almost 6 to 8 months to get 1,000 people. So 1,000 people, then I can go live. So now I'm live on 6 channels. So it allows me to spread my news, my wonderful, news. Oh, look at this, it's 11:26, 11:24. Now I said if we have over 200 at 11:30, I'll stay on longer. Okay, but we're down to 109. So if you guys don't like, share, comment, all that kind of stuff and get us up over 200, I'm out of here in 5 minutes. I think it's fair. All right, that being said, simple, safe, predictable, consistent, no way to lose. That's what was created for my 9-year-old daughter back in 2008. Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Rule number 3, make sure the company is consistently profitable. It doesn't compute in my head why anybody would invest money into a company that's not consistently profitable. Rule number 4, make sure it's weekly options. I want a weekly cash flow. This is my rule. Rule number 5, make sure the numbers work. These numbers, and then make sure the timing's right. It's actually that simple. So let's go on. Let's see, what are we missing here? Jout, J-O-U-T, yeah, no thanks. Walmart, we already looked at that one. So your strategy is more options. Do you buy and sell the shares or options? BD Slim. Okay, I buy stocks, I sell the options. Now, stocks, once you buy, here's another big question. Big question. Okay, Donald, we have enough to buy 100 shares to buy the strategy, right? Or can you do this with a long call? Actually, with a long call, that is called a calendar spread. Yes, you can. However, I was just getting ready to tell this to BD Slim. However, the flaw with that is a long call is going to expire, okay? And as you buy the long call and you sell the option against it, it's called a calendar spread. The value of your long call is slowly going to deteriorate over time. Okay, you will get a return, but here's the thing. If you buy it, the 186 option, you can't sell the 185s unless you put up more money. Because you buy the 186, you sell the 186, you sell the 186, you sell the 186, you keep going week after week after week. Okay, but if the stock drops, you can't drop your price unless you put more money up. And both options are going to expire. The thing with buying a stock is once you buy the stock, if I buy this stock tomorrow morning, 186.98, the price I paid for it is going to be always, always, always the price I got in at. The only way that changes is through dollar cost averaging. And I will own it until the day I die or the day I sell it, whichever comes first. Options, all options expire. is expiring and exercising the same. Not at all, Julian. Okay? Now, this one right here, if I buy at 186.98, I sell the 187s. This option is going to expire by Friday at 4 p.m. Now, to be exercised, whoever bought it from me is going to call up the broker and say, I would like to exercise my option. And then they will buy the stocks from you at the agreed price. So we have to have a big bankroll and strategy on shit. No, absolutely not. Whoops. Okay. Now over here, okay, see, now we did some research this afternoon, me and Doc, he's here somewhere. We did some research this afternoon. Here's some optionable stocks right here. Okay, 76 cents, 88 cents, $1, $2, $3, $4, $5, $6, $7, $8, $9, $10, $11. That's per share. You can buy 100 shares of a $1 stock right here. Look at this one, 103 CAN. Okay. Okay, here's CAN. Now, let's go to the last 30 days. Now remember, this is not advice. This is nothing like that. Hold on a second. Julian, can you make this work and collect a premium without exercising or expiring? Yeah. Hold on. Okay, look at this stock right here. It's called Canaan Incorporated. The current bid is 101. The ask is 103. If I buy it for $1.03, well, I can turn around and sell somebody the rights to buy it from me for $1, and then I collect 5 cents. Well, you subtract the 3 cents from the 5 cents, and you walk away with 2 cents. I know 2 cents is not a lot, but 2 cents is 2% of a $1 stock. So yes, you can. And there's always something that's called dividend capturing, where you buy the stock 2 weeks before the EX date, and then at the market price, and then you sell for the market price plus the dividend, and that's called the dividend capturing 2.0, where you collect the equivalence of the dividend, not the dividend itself. Okay, so same thing. You can do it. You just have to change your thinking to make sure you never buy something you don't want to own long term. Okay, make sure you want to buy it and hold on to it. Where is that list of the cheaper good stocks? Believe it or not, it's right here. Okay? Me and Doc came up with that list this afternoon. Actually, Doc came up with the list. I just refined it and took a look at it. But, you know, they are out there. Intel, struggling with their investments, had to completely change their investment in Ohio. Okay, Cole, thank you for that. Buying shares, that's covered calls at the money, hopefully cash in Friday. Yep, that's it. Big Mac, Walgreens has a massive interest rate at the moment, although it drops fast. Okay. Jout doesn't have options. Yep. Julia, how are you? Will you walk through the buy again? Yeah, give me a second. Thank you. I have about 20 grand to play with. Try your strategy. Whoa, Donald, hold up, hold the phone. Donald, I never, ever, ever encourage people to buy flat out. I always tell them, download this. Hold on. See you next time. Thanks for, wait a minute, don't disappear. Download it. It's free to download. It's called Thinkorswim. Go to thinkorswim.com, download it. Buff, Donald, you could value ET. Hey, well, hold a second. Buff, you could go to any value ETF and sort their holdings by price. Okay, that'll work. But listen closely. Don't invest any money until you know what you're doing. This here, you can download it for free. They have versions called paper trading. It's kind of like Monopoly. You can play the game without any risk whatsoever. Okay? Don't invest any money until you do paper trading first. Get good at the concepts. Get good at the buying and selling with no risk to your money. Okay? Before you put real money in, practice, practice, practice. I've been trading over 20 years. I still have a paper trading account, and I still make mistakes. Your biggest mistakes are going to be saying the wrong words. I want to buy this and I want to sell that. Yeah, no, you want to sell and you want to buy, not buy and sell. Think or swim. TH. T. Think. Think or swim. Don't ask me why, but think. THINK. Think or swim. That being said, paper trade first. Practice. It's like Monopoly. Think, yes. No, it's think. Never mind. I'm not going to argue with you guys. Anyway, that being said, let's see what else we got, because we're going to go with these last questions and then we're out of here. I'm not going to look at anything else. All right, how much capital gains affects your profitability from the 1%? Oh, metal media. Okay, apparently, you don't have a tax strategist to talk to, because what you said right there makes me believe that you're actually paying taxes. If you're paying taxes, you're doing something incorrect. It is your legal right, your legal responsibility to pay the least amount of income taxes possible. That's what that big ass freaking IRS code book is for. It's not to tell you how much taxes you owe or how much you have to pay. It's to show you how to not pay taxes legally. Your tax strategist or tax planner will guide you on how to set up your account, how to trade, and what to do so you don't have to pay taxes legally. Okay, so Dina, indeed, Intel is incapable of executing anything, but it's a great cover call play. Thank you. Oh, you can move to Puerto Rico. No income tax on capital gains. Julian, So, can I do a covered call, collect a premium first day, and then sell it before Friday? No. If it stays the same or goes up, but don't sell until it expires and the price goes down. Okay, Julian, here's the thing. If you buy a stock on Monday and you sell a covered call that expires on Friday, you have to wait until that option expires, or you have to buy it back. You cannot sell something that has an option blocking you from selling it. Okay. Let's finish up. Thanks. I get buying dividend stocks. Always get frustrated on covers. Well, dude, BD Slim, you got to come hang out with us. Where to invest, crypto or stock? Okay, I don't do crypto, dude. Sorry. But wait, it gets worse. Yes, it does. Love the straightforward answers. Rude, dude. Haven't heard from you all night. I didn't even think you were here. Okay, Metalmax tax, I meant. Yeah, tax. If you are paying any kind of income tax, you're doing something wrong. Call a tax strategist or tax planner. Sorry, Ivan, but you came up with a bunch of lemons, Ivan. You did. Okay, brother? All right. If your contract is an exercise, do you sell the same strike for the next week or lower the strike? That's definitely, okay, SBUF 28, that's definitely going to be dependent on where the stock ends up on Friday and where it opens up on Monday. Because Friday afternoon at 3 o'clock, we take a look at our positions, and then we decide which is the best place to place our trade. Do we roll it into the next week? Do we let it expire? Do we let it get called away? Those questions can only be answered at 3 o'clock on Friday. That's why we have the morning trading group. If you're serious about investing, you should think about it, because it's $100 a month and you get to watch everything that I do. You get to ask a lot of questions. You get access to the Discord, and those guys in the Discord, they have a lot of more information than I do. Anyway, let's keep on going. I'm just answering questions from now on. Ivan, does it have a dividend too? Does it have weekly options? Where is it at on the chart? Great. Julian, hold on a second. Connor Johnson, covered calls on dividend stocks, one of the safest trading strategies out there. Yes, it is. Can you walk through your buys on Thinkorswim? Julia, hold on a second. Julian, I work at a pizza shop. Guy was a driver, worked here for 27 years and used a similar option strategy. Some years he lost, but during COVID he made over $1 million. He quit, now he's retired. Well, Julian, that's an inspirational story right there. Okay? 27 years, think about it. Most people work 30 to 40 years of their life. Some people work 50 years. I started working in 1973. Last year was my last year. Do the math. I've been working quite a while, more than 27 years. All right. Can I walk through your buys on Thinkorswim? Okay, Julia, you can come back tomorrow night. It's way past 11:30, and I said if we're over 200, I'll do that. I'm up 400% on NNE. Cool beans. Is there a free website to do trading? Yeah, it's called Thinkorswim. Go to Thinkorswim, download it, and just call up. They'll give you the phone number. Just give them a call. Say, hey, I want to do some paper trading, see how it works out. Okay, all in Verizon, we already looked at that one. Buff. COVID was a special time. Anyone could have made money in the market. Yep, it's a bit tougher now. How can I join the, hey, we the people, how can I join the trading group? Come on, dude, you know that. You've been here long enough. Okay, how do you join the trading group? Go to the10minutetrader.com. The link is right there in my bio, top left corner, right in the bio, right there, right there in the bio. Okay, the10minutetrader.com, very first page. Okay, simple, safe, predictable, 1% per week, live nightly training, 9 p.m. Right there. Once you click on Trading Live online, it takes you to the Patreon, which is Dividend Stock Talk. That sounds familiar, doesn't it? Hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for a 1% safe, sure, yeah, Dividend Stock Talk. It's on Patreon. Okay, where were we? Okay, here we go, back here. Okay, so we'll go and finish this up. Housey, is there a cost to it? Yes, there is. Cisco, okay, we're not doing any more tonight. He said, don't tell it early. What's the charge for morning trading group? Okay, there's a bunch of different charges. Depends on what you want. It's $1,200 for the year, $500 a month if you want personal one-on-one training, personal one-on-one, nobody else, or $100 a month to join the trading group itself, and you get the Discord, blah, blah, blah. What about ET? We're looked at energy transfer, 3A, blah, 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 blah. Okay, Ivan, KK Supreme. Is it a dividend paying stock? Yep. Does it have weekly options? Yep. Where is it on the chart? Yep. Cool. Hasbro, yep. Landbridge, blah, blah. I can hear that. KNN. Okay, we're basically done. What happening with your forming a fund and how far in is the process? Kashif Ali, how are you today? Hold that thought for 1 second. Thinkorswim is where we do paper trading. Absolutely. Well, that's right. There's a lot of different trading platforms that will allow you paper trading. How is your follow-up? How was your Florida trip? I'm still in Florida. Okay. Now, what's happening with my fund? Well, at the moment, we're in the fourth quarter. Okay. I need 1 whole year of actual trades. Okay, see all these trades? I need 1 year of verifiable trades. So every single one of my trades this year is verifiable online. Anyone can look at it. It helps with investors so they can say, wait a second, what has he been doing? These are all my trades. I have 3 accounts that I share, and hopefully when the investors start taking a look, say, great, that's 1 whole year. Wonderful. After that, then I have to get a core group of board members. And eventually I will get board members to join. And then from there we start getting all the paperwork, all that kind of fun stuff. So maybe sometime next year the fund will be open and available. Other than that, it's on the list. That being said, this is James from Dividend Stock Talk. You guys have a great day, and we will talk to you again tomorrow. Same time. Let's stop broadcast. There we go. And you guys have a great night. We'll see you again tomorrow.
Buff, we'll see you tomorrow. I'll be here again tomorrow night.